Good morning, everybody. Welcome to NinjaTrader Live. Happy Friday on this glorious day. Joining me live from Chicago, Illinois area. Pax is with us. Pax, how are you?
Great, Kegs. How are you?
Pretty good. Yeah, that's been the family nickname for sure for forever, right? Yeah, Dudley goes with Jimmy, which is fine, but that's been it, man.
It's a great name, Kegs. That's what I would,
Yeah.
if we knew each other, but you were from the West Side, if we knew each other as kids, that's what I certainly would have called you. Well, good morning, Jimmy.
Yeah.
How are you, bud?
I'm doing pretty good, man. I am really doing pretty good, and I'm just, watching these markets this week. Kind of just surprised at this grind up we're seeing in the equity markets. It's truly been interesting.
Well, um, I haven't found it very interesting until the last couple of days. These last 2 weeks since the 55 handle, since once we got above 5509, 3 weeks, now going back to late April, I think has been a very difficult trade. It's been, we've had a couple of gap and goes, and those were the big moves. Everything else during I like to use real life information to make real life trades, or live information to make live trades. And I get long the opening range, pay for the trade, take profit, and get stopped out. And then we take out the opening range, you get short, pay for the trade, get stopped out, and then just leave. So the last 3 weeks have been a series of, scratches and nothing. And then overnight go, or at odd times go, a low volume, low interest rally in the indices. And so it hasn't been very easy in my mind to trade, and a whole lot of uninteresting things. So now I've been.
Yep. Pax, I'm not hearing anybody.
How about now?
There we go. I got you.
Okay. I don't know what I did. Uh, I've been tweeting about this level and talking about this level now since January 1st, or, when we opened the year at 59.49 now. The market has gapped its way back up to this level. It's clawed its way back up to this level. There hasn't really been any clear momentum to this level, but we finally achieved the three major pivotal levels that we needed. The quarterly pivot of 56.17, the old quarterly pivot, or what I call a flattened zone, of 58.40, and now we've achieved the yearly opening range, which is going to be 59.49 to 59.67. So above this level, we get one close above it, and we should start to rally. Two closes above it for confirmation. One close above 59.49 and another close above 59.67 for confirmation. That elects a whole nother move now up to 64 even, 65.07, with a bunch of stops and starts and targets along the way. But this is the pivotal area, Jimmy. The S&P needs to close above this level. We do
So
that.
I
We
so
got a whole
so
new run.
so Pax, I just put a rectangle there to kind of highlight your range that you just mentioned above that 59.49 level. The top of it's approximately, I think you said 59.66-ish. That's that this so this is your sweet spot, right? This is like, man, we need a close above, we need a second close above, and it's off to the races. Is that the idea?
Yeah, there will be new buying and new momentum and fresh interest above this level. Yeah. Yes. So this is it. And every fund in the world is looking at this price. Every institution is looking at this price. Every institutional investor and trader that move markets, that trade big size, is looking at this level. It's steady on the year. This is steady on the year. Below it, we're negative. Above it, we're positive. This is it right here.
Yeah, what do you make of, like, this morning when I logged in and I saw, like, I logged in early. I'm old, I get up early. It was like 70,000 contracts in the E-mini S&P only, and I was like, oh, this is going to be a low volume start for the day. Is it just because it's Friday, or what do you think about that?
Oh, I think it's a combination of things. Yeah, overnight we've got, it's again what we used to call the dreaded creeping rally, or kind of a low volume rally.
Yeah.
So I think that, like I said, a few things. Once we close above here, if we close above here, then that'll bring in new buying and new volume. Volume overnight has been really low. We have OpEx today, and I think that there are a lot of people waiting for that. And we also have a lot of data, a lot of 8:30 numbers and a lot of 10 o'clock Eastern time numbers. So a lot of volume waiting to be deployed then. Not to mention the fact that whenever we're churning the incredibly major pivotal level, there's not going to be a whole lot of interest in it until we're above it or below it, until we clear this level. Like long-term profitable traders, Jimmy, are not just, unless you're a PM at a fund or, you got a huge amount of capital to deploy. But even then, everybody's waiting to see us move away from this level before you slap them on, and so interest and volume in this dreaded creeping rally is going to be very quiet. It's going to be tough. So just, uh, um, uh, it's going to be tough, and
Yeah.
we need to clear this area. We just need to clear
Yeah.
it, and then on the upside or downside, if we hold this area and we start breaking, we're back in a more defensive stance. We get above this level, it's offensive for everybody, and this is going to bring in more volume. So OpEx data today, and the fact that it's Friday and the end of the week of and. Anthony and I have been talking all week, the last few weeks about it. You and I have talked about it on the show on Fridays, but the show has been about the bonds, especially the long end. Now the bonds seem to have found a low yesterday at 112. What was the low of the bonds? I think was
Yeah. I'm gonna
112.29.
Let me pivot to that chart. I did a tweet on it this morning. You know, the low, this was
111.29.
yeah, 111.29 was yesterday's low. Ended up with a green candle, almost like an equal and opposite candle from the
Mhm.
previous. I have a loosely fitting kind of trend channel here. If you could see it on the chart, that we finally broke out of it a tad. We're above that 8 EMA on the 30 now. And so, this kind of area, I had this as my area of support. We're back above it right now. So, interestingly enough, I was surprised at this move this morning, given the low volume and the size of it overnight. So there's some adjustments going on. Maybe there's profit taking internationally. Who knows? But that was an interesting pop up. We're almost to a 14 handle now. So the
Yeah.
idea of the idea of a 10 handle, which we were thinking about earlier in the week, is a tough thought. That we're kind of losing that potential right now.
Well, okay. Another interesting and important point to make is that the pivotal level in the 30-year bond in the long bond, that always makes me feel smart when I say that. The long bond.
You are smart, man.
Uh, I try not to use. I try to use words and phrases that mean something to me that are not necessarily in industry accepted terminology. Um, the long bond just makes me sound like I'm using industry accepted terms. Okay. Anyway, the pivotal price in the 30-year is going to be 113 spot 24. So 113.24. That is a series of old expiration prices, which is incredibly important. Actually, there's three of them at that price. And uh, maybe more importantly for the world is that 113.24 is where the 30-year bond had opened the year. So 113.24 is steady on the year. And we had when we had taken it out last week, I thought we can go as low as 110.19. But it stopped a point short, and the pattern, the pattern on the chart, the daily that you're looking at, sure looks like a bottom, and that could be a big bottom. So 111.19, we've reclaimed steady on the year. So now the 30-year bond has got a lot of room on the upside, 114, 115, 116, all the way up, and then we'll see 120 pretty quickly, I think. 117,
Yeah. So
I don't know that high. First, we got to get to that. We have to take out that high of April 13th, 117.21.
117.21. Hang on. Let
Right,
me let me put a PAX line right there just so I have it. 117.21. And
right
yeah,
there.
that's exactly that. That's that high that we saw on April 30th. We going back to the 110 handle. We haven't seen that since mid-January
Yeah,
of this year.
right.
And it looked like we are going to do it, but no, not yesterday. Buyers intervened. And then today it's like, all right, we're going to keep this thing rolling here, going into the weekend.
Uh, yeah, right. I mean, there's so many so many kind of variables, but variables that are have been kind of unclear to me, at least in capital flow terms, until it's been all about the bonds is what I'm trying to say, or what I'm thinking. It's been all about the bonds. It's been about metals. It's been about gold. And now with the bonds reclaiming its steady on the year price, um, uh, now the equities, now the show is going to be more about the equities. Also, it's important to note that the Nasdaq earlier in the week had taken out its steady on the year price. Its yearly opening range, 21,269 to 21,347. The Nasdaq, it's also interesting and important to note, as I've said many times, I like to see the Nasdaq lead. And the Nasdaq is as strong as the indices right now. It has been for a while. It led on the downside, and it's leading on the upside. So we've had those closes in the Nasdaq, and that takes us up to the 23-24 handle now. 22,000, back up to the all-time high of 22,299, and that, well, 22,319 in the extended hours, and 22,299. So now it's about so the Nasdaq has already cleared that hurdle. Now it's about the S&P clearing it, closing above it, and taking off. So
Yeah.
I've been neutral in my stance since mid-April.
Yeah.
Neutral to bearish. These dreaded creeping rallies are not fun for me to trade. I don't like these dreaded creeping rallies. A dreaded creeping rally would be something that when I was on the floor in the Nasdaq pit, if I wasn't trading the breakouts from the opening range, I'd be fading it. The market stops,
Yeah.
sell them, stop. Well, we're not going higher. And then, I'd be puking them overnight or puking them the next day as we gapped higher. Those are the dreaded creeping rallies. And I've lost millions of dollars in those moves over the years.
Yeah.
Um, until I just kept it simple and actionable and
Yeah.
objective, and just traded the breakouts from the OR, and that has
So
protected me all the way through. Capital preservation is the most important aspect of this entire business.
in your OR, I remind everybody, is it 30 seconds or is it 5 seconds?
The opening range has been clearly defined by both exchanges, futures exchanges, as the first 30 seconds, the high and the low of the
Okay.
first 30 seconds since Dow theory was invented in 1910s.
There you have it. So I just one last word on the bonds though, and I'm going to show you another chart. Jimmy Urio taught me this. He's like, you got to look at these even levels, like 30-year at 5%, 30-year, at 5.5%, 30-year at 6%. Those are all warning levels. Right now we're, I think the cash market's about 4.85-ish last time I checked. But this chart here I want to show you is a correlation between the E-mini S&Ps and the long bond. See, I'm getting smarter too. And you see, up here, just focus on that orange line or the yellow line for a second. It was oddly positively correlated back at the end of April. I
Yep.
mean, this is just not textbook. And now look at it. In a matter of 2 weeks, we're back to almost perfectly negatively correlated. So this was this uncertainty area for me, that's kind of totally reversed right now to a normal environment.
So the S&P bond spread is something that I've looked at for the majority of my career, and it's something Ira Harris and Judd Hirschberg had taught me years ago. Ira had come up with the idea of the correlation on a run down Lakeshore Drive one day, I think in the 80s. Anyway, the point is that, and Ira's coming in to talk to my traders either today or Monday, tell us his macro view and what his positions are and what he's looking at. But the S&P bond spread is something that always makes me think of him, because there are incredibly powerful correlations. Now, for me in my trading, I have stopped using it because it makes me overthink, and it makes me overthink, and it makes me too biased towards one side or the other, and that is something I need to leave out of my trading. So, but and also, the correlation between the markets changes so often. 2018, the fourth quarter of 2018 is when the bonds. Remember how the bonds and the equities used to move opposite one another?
Yep.
2018 they started the equities started to follow the bonds.
Yeah, so I mean, I look at it as just in a longer term picture, and I think in terms of money flow, right? There's so much money in the world and it goes places. Sometimes it goes in people's pockets, money
Right.
markets or whatever. Sometimes it goes into gold, sometimes equity, sometimes multiple places. So when I see that inverse relationship come back, that helps me say, all right, I'm going to keep an eye on the bonds now just to form a longer term bias on in the S&Ps. That's how I look
Yes.
at it.
Oh, I do too. I do too. But when I zoom out, when I take a little bit more of a longer term view, I'll which I usually do on Sundays. I'll look at the S&P bond spread and see what the correlation is. So I
Yep.
think I think now with bonds rallying, and finding a bottom, so rates are coming down a little bit. 'Cause remember, everybody, the bonds are inverse. So the bonds are rallying, rates are going lower. I think that'll put some wind in the sails into the indices, and we'll see some follow through to the upside, especially as we close at these levels. Or we close above these levels that we talked about, 59.49, 59.67. We close above that. I mean, that Alexa moved to 64 even, 64.01 to be precise, and 65.07, so the big round numbers. That's it. We're until we close back below 59.49. If we fail today, that'll be negative. That'll be largely negative for the market then too. We can. That doesn't mean that we start to break. It means that we sit and churn here until the market decides which direction it's going to go.
Right. And just to kind of, so Ryan was asking a question in the chat. Hey, good morning, Chad. Thanks for being here, everybody. We greatly appreciate everybody being here this morning. It's a Friday. Wouldn't hold it against you if you went to the beach or took a day off, but we appreciate you being here. So Ryan's asking, Pat, and I think you've already answered this question, but let's talk about it again. He says, "Hi, Pax. Right now we're above 59.49, which was your level. What would your bias going forward here today be as we are above that level and would be looking forward to a 59.67?"
uh, to the upside. So I am as long as we're above that. How do I explain this quickly? As long as we're above 59.49, my bias is to the upside. Um, uh, with confirmation above 59.67. Um, then I'm going to use the opening range. So that's the yearly. So I'm going to trade breakouts from my pivots, right? So 56.17, 58.40, 59.49, 59.67. But every day I'm going to use the opening ranges as my daily pivots to drive me between these bigger levels. So the opening range, obviously, unless the number in 12 minutes has something else to say about it, the opening range is going to be someplace within that pivotal area. So I'm going to be long above today's daily opening range, and I'm going to be short below it. I'm going to keep my trading objective. So if we open, for the sake of discussion, we open, let's say our opening range is 59.49 to 59.55. I am going to take two expenses. I'm going to give myself, I call it 2x4. I'm going to give myself two expenses with full size. If I don't, if I don't find the momentum of the market easy, meaning I pay for my trade, or manageable, meaning I can take a scratch. If I sell 59.49s and it goes 59.50 bid, that's one expense. If I sell nines and they go offered, scratch, stop in, stay out of the way of the market. So I'm going to give myself two expenses with full size. And I might size up a little bit because of the nature of where where the pivotal opening range is. And then I cut my size. If I've got two expenses in a row, I cut my size, and then I only give myself two more expenses, and I'm done. Hands off. Get out, walk away, make a pot of tea, get another protein. I drink protein. I don't drink tea anymore. I drink protein shakes with little caffeine in it. So go get another, or I don't know, do some push-ups or planks. I'm working on my abs. I want to be a 55-year-old man with a six-pack.
So Pax, would you be done for the day in that scenario? Like I'll
No,
come back on, no.
no, I'm done with the opening range. And then at that point, I'm looking at well, a series of things. The S&P rotates 15 handles from the opening range. So it's always a 15 handle rotation. 15 handles up, 15 handles down. Always gauge the opening range and 15 handles from it. So I'll look if the opening range isn't giving it to me, or maybe it's giving it to other traders in my group. I'm human too. Everybody else is long and they paid for their trade, but I'm on the bench because maybe I'm not seeing it well, or I'm not executing right. I'm not confident, carefree, fearless, and focused, and all of the other things that I talk about. So I put myself on the bench and I wait for that first 15 handle rotation, and then I'll get long there or short there, depending on what it is. And if I don't see that, then I'll use my daily targets that I talk about in my plan. You know, these bigger levels that we're talking about to initiate a trade from. Maybe I wait until 59.80 which is a daily target for me to get long, or 60.09, which is ultimately 60.09 is the first macro level based off of the quarterly pivot. So anyway, that I've got a
Yeah.
lot.
So
Oh, but a key aspect of that, if I wait for the 15 handle rotation to get long or short, I'm only giving myself two expenses there. That's it. My expenses. Listen, the issue with trading the opening range or any other breakout is over trading it. So my expenses should never, ever exceed, whether I'm talking about the opening range or any other level, more than what I can make when I pay for my trade by taking part of my unit off. So if I'm trading 4-lot units, I should never, ever spend more than $800. That's it. Most of you are going to buy the opening range and put in a stop 4, 6, 8 handles below. And by the time you get stopped out, you're down more than 800. In my system, I should never be down. Capital preservation is the most important aspect of this business. So I should never spend what I can make when we get to the pay line, which is $800. So, and then because once we get there, then I sell a quarter of my unit. So if I buy I don't trade 4 lots, I trade more. But if I buy a 4-lot to keep it simple, I pay for my trade at 4 points. Now I've locked in profit for $200, but if I've got expenses, I can flatten up, take the money and walk away, right? So your expenses should never exceed what you can make when you pay for your trade. Protect yourself at all times. You don't need to be part of every wiggle. You don't need to be part of every move. And please don't scalp the noise. You'll get
but in
destroyed
your
run over.
in this method, if I understand it correctly, you might be in and out relatively quickly.
Yes. Right or right out. Yeah. If I buy, again, let's say top of the opening range is 59.55. If I
Yeah.
buy 55s, that market immediately has to go 55 quarter bid, 55 half bid for me to keep the trade. If I buy 55s and they go 54 offer, I'm out. That's an expense. I can always put the trade back on, but I can never get back lost money. Lost money is gone. In the past history, it's lost. And I will never in my entire life again make another trade based upon a loss. I will never, ever look back on my P&L and make a trade based upon my P&L. I blew up in 2012 doing that shit. I will not ever do that again. I need to survive to thrive. So I'll be right or right out on every trade I make. Everybody, look, 90% of you are going to fail. So why in God's name do I want to think, act, and trade like 90% of you? I don't.
Yeah. Well, our mission here at NinjaTrader Live is 90% of our communities are winners, man. That's what we're going for.
True that. So right or right out, period. I'm not going to buy 55s and put in a 49 stop. I'm managing money
Yeah.
for my family. I'm not managing money for some fund.
Yeah. No, absolutely. I get that. And that takes this method. I mean, it's scalping as we defined it in the old days is it was unique, a little bit different, but this is kind of close to that, right? Because boom,
Well,
you hit that rotation, you're in, and if you're scalping out if it's not working.
oh, well, yeah, but the way that people would scalp on the floor was you buy 100, you sell 100. I'm right or right on my initiated trades, but when that market stays bid above 55, I don't flatten until we get to I don't flatten up until we get to the trade objective. I was short from 61.25 to 59.49. I was short for a month before I flattened. I flattened at 50.
Okay.
I flattened out in that opening range. I can't remember what the date was, but in April when the opening range was 49.49. That's when I flattened, and then we rallied. That's the day that we rallied, or the next day is when we rallied up to 55, whatever. I was getting fitted. Talk about old. The day that we rallied that day, that 10% or whatever, I was getting fitted for a CPAP machine mask. Thank
Oh
God.
my God.
Oh,
Oh
thank
my God.
goodness. All the traders in my group are texting me. I'm long. What do I do? Where are we trading? I got in my car, raced home. Oh,
Wow. That that's
April
awesome.
9th.
That's a, all right. Well, we do,
So
it's unusual for not always, but it's a little bit unusual for a Friday to have some economic news that were kind of that could be meaningful. So we're going to have Shai coming in here in a couple seconds and walk us through what's going to hit the streets, and then we'll keep it going until we get some numbers that hit the stream. Hey, Tracy.
Oh, hey, here I am. Hi,
hi
guys.
Trace.
How are you doing?
I'm great. How are you,
Hey,
sister?
so I'm doing good. So this morning we have housing start, building permits, import and export price index, and then at 10 we have University of Michigan consumer sentiment, inflation expectations for 1 year, and inflation expectations 5 to 10 year, and then 11:30, of course, Atlanta Fed GDP now. Um, as far as market movers, probably everything except for Atlanta Fed has the potential to be a market mover, except for housing starts and building permits. Housing starts and building permits obviously will be a gauge of kind of the health of the real estate economy. So obviously, economists will be looking at that. Now, U.S. import price index and export price index is going to be important. So, import price index tracks the average change in prices of goods and services purchased by us from abroad, such as oil, industrial supplies, food, capital goods, consumer goods, etc. Now, being the BLS and how conflated the government is, it does exclude tariffs. However, it's supposed to show the supply and demand based price changes that result from tariffs being announced or imposed. So even though the number actually doesn't include the tariff amount, it's supposed to show, again, the supply and demand based price changes that result in tariffs. The export price index obviously measures the average change in prices of U.S. goods and services sold abroad, agriculture products, industrial goods, manufactured item. Why are these two important? Well, they're important inflation signals. Higher import prices can lead to more expensive goods for consumers, imported inflation. Export prices affect producer income and terms of trade. So if you have rising export prices, that can indicate stronger foreign demand or constrained supply. Falling import prices can reflect the strengthening of the U.S. dollar or reduced foreign inflation. And so economists and policymakers use these indexes to gauge kind of external inflationary pressures, which can influence monetary policy decisions. So that's why those two are important. I think a lot of people brush those two off, but they are important gauges.
So, Tracy, one of the things that worries me, and it's not worries me, but is on my mind, is there's a lot of talk on CNBC and in Twitter and all over the place about sentiment, right? And how it's becoming maybe more and more important in terms of affecting asset prices. I'm surprised to see University of Michigan right now at 53.5 is their expected level. Do you think that could be a big deal at 10 o'clock?
Yeah, I mean, I think that's definitely worth watching. They actually expect sentiment to be higher, or whoever the survey of people is that give us these numbers. Uh, uh, it was 52.2. And as far as inflation expectations, prior was 6.5% for 1 year. It is supposed to remain the same, and same with the 5 to 10 year inflation number, which came in last time at 4.4%. Expected is the same.
Got it. Got it. Well, we're going to get this data really quickly here. I have a question for Pax, but we're going to get the data in 30 seconds, so I'm going to hold it because it has to do with the opening range and the news feed. But hey, hold that thought for a second, Pax, because I got a good one. Someone in the chat actually has a good one. for us. But yeah, we're gonna get these numbers here in a couple seconds. Hopefully, knock on wood. And you'll get them on whatever data feed you're looking at. I got
Pay
the
attention to
count.
the
I got
bonds.
what's that? Say it again, buddy.
Watch the bonds on the number. We're trading at 113.30. SPOOs are trading at 59.57. NASDAQ at 21,495. That's what I always look at on numbers.
Oh, wow, that took
All
a
right,
while to come in. All right, they've come in. Housing starts at 1361, pretty in line. Building permits 1412, expected 1450. Import price index month over month came in at 0.1%, expected was minus 0.3%. Year over year came in at 0.1%, expected was minus 0.2%. Export price index month over month came in at 0.1%, expected was minus 0.4%, and year over year came in at 2%, which was actually lower than the prior at 2.4%.
All
Wow.
that data for a lot of nothing. It just moved us offered. We went from 57 bid to 57 offer. Rah, rah, rah.
Yeah, but that goes back to my comment
Yeah,
earlier.
a lot of
We have 96,000 contracts traded only today. I mean, it's a slow day.
Right, yeah, right. Oh, the dreaded creeping rally continues. I am really, 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 really waiting for, well, OPEX now. Well, we have consumer sentiment at 10 o'clock Eastern, right? 9 o'clock my time. And University of Michigan sentiment. So that'll be important. But I mean, now it's oh man, it's a matter of just clearing this level, like we talked about earlier in the segment. We get above this, and then next week there'll be fresh buying. There'll be new interest. We get past these days, we'll be all right. But man, this is gonna suck today.
That's
See, no, Charles Payne is not putting me on Fox Business. Listen, I sound like I just stepped off the 35th Street bus.
So me and Tracy
Oh,
both know that. Me and Tracy both know that if that's a technical term.
Yes,
This sucks
yeah.
as a technical term. It's in the books. We know
It
that.
is a
Sorry.
technical.
Sorry, Wade, if you're listening.
All right.
Sorry, NinjaTrader Live
I'm gonna
boss.
I'm going to
Thank
leave
you.
you two to the charts.
I love you, Tracy.
Thanks.
Thank you, Tracy.
All right.
Oh my goodness. So Pix, when you're looking at the question in the chat was, hey, if there's some big numbers coming out, does that affect how you look at that first 30-second
No.
initial? Okay, that's what I thought.
No, it doesn't change. I'm long above it, short below it. I mean, I don't trade outside. I don't initiate trades outside of regular trading hours, except in rare circumstances. And a number, could be one of them. I've had some great trades off of a CPI number at 730. When the market is going to and through major pivotal levels, I'll take a long or a short above that. But for the most part, I don't trade outside of regular trading hours. And like we're talking, and I think this goes to a question somebody else asked too. So, I'm looking at pivotal points. I'm looking at pivot points. The markets are always doing one of three things. That's it. We're going higher, lower, or nowhere. Okay. And if we're going higher or lower, I want to know. I want that to be objective information, not subjective based on a minute chart overlaid with a 15-minute and a 30-second. One of the things that drives me crazy about young traders is they talk about, this area and that area and never really talk about levels. The market uses pivots to get long above and short below. The most important tradable price in any market is always going to be the very first tradable price. And that's going to be, in the big S&P, which is, no longer viable, was 1982, January or April of 82. The most important tradable price in the E-mini S&P is January of 1997 when the E-mini started. Now, Leo Melamed, the father of financial futures, in his infinite wisdom, had come up with an idea of cash settlement and all that other. I can talk about that some other time, but replicated those opening ranges every quarter, and those become our big quarterly pivots. Now, then we have yearly pivots, quarterly pivots, monthly pivots, and then daily pivots. So I'm long above the daily to these bigger pivots. And then once we get to these bigger pivots, I'm adding or I'm taking, I'm getting short. And the key here is that I'll trade the 15 handle rotations for little wiggles. I call them wiggles. I'll trade for these little wiggles on a chart, 15 points, stop out for a scratch on the balance of my position. And I'll try to pull a little bit out here and a little bit out there and a little bit out here. But I need to continue to do that, manage my expenses. My expenses should never exceed what I can make at the pay line or when I pay for my trade. I need to manage my expenses because I know that if I know 100% factual that as long as I survive, I'm going to catch moves like from 61 quarter to 49.49. I will catch those.
Yeah.
But I cannot chop myself up in any given opening range or any given pivot. I cannot take more expenses than what I can make when I remove 1/4 of my unit to pay for my trade. And that's it. Because I know those big trades are coming. They're coming.
So Pax, I just threw a 30-minute E-mini S&P chart up just to kind of see what's going on after the numbers. And I just kind of checking the daily range so far is only 35.25. It's a tiny range. I mean, I don't even know what the ATR is. I do. I got 118 handles.
ATR, the ATR I've got is like 80. Hold on, let me look. I looked yesterday. It's down to 80 points, and I'm looking at a 10-day look back, so a little bit broader. It's 80 points, man. We were a month ago at all-time highs in the ATR at a month ago, August or April 15th. We were at 300 points.
So I'm wondering why, right? So I do a 14 period look back, so my number's different than yours, but clearly that ATR is shrinking as we're going forward. In some, casual observer might say, well, this is normalizing now, right? We had some extraordinary confusion with respect to our trade policy here in the U.S. and this little, this turf battle between Powell and the president. And now that the dust is settled and we kind of see the pattern here of what's going on going forward, maybe we'll get back to, and I hate to use this, but I'm going to use it anyway, normal paradigm. Do you think any of that has to do with that?
Of course, yes. I also don't, let's not forget that we're still in a, hugely uncertain period. And there's a lot of really good news coming out of the administration, a lot of really good news coming out of the, everything. The tariff rollout was mismanaged, I think. But anyway, the point is that, or in my mind, a lot of positions got blown out, so there are a lot of longs that got blown out of their stuff on the way down. And then there was a lot of huge, I mean, we were close to things breaking. We were very, very close to firms and funds going under until they found that bottom. I mean, very close. We talked about it, the bonds are about to break something. Things look like, and then we found a bottom, we started the rally. So I think that there's, a lot of the positions that blew out, a lot of the longs that blew out will be looking to be reestablished above this 49 to 67 level. So that's why I think there's going to be all new fresh, above the yearly opening range, there's always a lot of fresh buying and a lot of fresh selling underneath it. But this one, I think, is extra pivotal because of the amount of open interest that we lost, and because in that blowout and the positions in other equities and derivatives that are going to come flowing back into the market as we close up here.
Yeah. So, Michael, I use a opening range indicator that you could set to whatever time period you want on my NinjaTrader desktop charts, and it's not native to it's a plugin. You can get it at the ecosystem. Just shoot out an email to learn@ninjatrader.com. I'll find that for you. It's just a simple zip file. Boom, you install it, and then you can go ahead and set it for 30 seconds, 1 minute, 30 minutes, whatever you want. And I do that for the London initial balance. I do it for the U.S. initial balance, but you can set it for however you want. It'll mark the high and low of whatever increment you're looking at. So just shoot out that email to learn at ninjatrader.com, or go to the ecosystem website. I think it's a free I think it's a free plugin. So that's what I use. It's and I could show it to you later on.
And Michael, I can I've talked to Anthony about getting with the developer at Ninja to develop an opening range indicator. So one of these days, now that the market is a little bit quieter, one of these days I'll get with Mike and get that done so that we can get that out to you guys.
Oh yeah, I mean, Mike Burke's a genius at this stuff. You give him an idea, and then all of a sudden you got a zip file in your pocket the next day.
Yeah, right. And to me, it just seems like it's daunting. I'm lucky to be able to email. That's it.
Yeah, I'm sure he's listening, saying, "Guys, stop saying this, because I got this whole trader development website I'm building right now, man. What are you putting more on my plate for?"
Stop. Yeah.
No, he's a good guy. He's a great guy.
Yeah, oh my Lord. So look, we just went on that number. We went from 56, 50, S&P went 56, 57 half bid to, we just traded down to 59.49. So we're going to flirt with this 59.49 level all day long. I'm going to say it right now at 8:41. I am not willing to spend any money in this market today. I am not willing to take a dime of expense in the market. I'll trade. I'll buy whatever the opening range is or sell the opening range, but I'm not going to let it get away from me other than a tick or two. There's one thing there's one other point that I want to circle back to from the comments here about dollar cost averaging as traders. Don't ever, I almost just drew out an F-bomb. I'm so careful in not doing that, but don't ever add to a loser, ever. Maybe in your investment portfolio, you dollar cost average, but as traders, you should never add to a loss, ever. Learn how to add to profit, period. 90% of you will lose all your money over the course of a long period of time or a short period of time. Why in God's name do I want to think and act like 90% of you? I don't.
Well, you just can't
add to profit.
You catch the wrong side of a trade, you just can't be liquid long enough for it to recover, and you're stuck, and you're using up your margin, and you're losing money, and you're getting frustrated. That's not a good combination of anything.
No. Learn how to, here's something that most of you won't understand. Learn how to add to your positions without adding to your risk. That's it. Learn how to add to your profitable trades. And if you don't understand what that means, follow me on Twitter or join my group and you'll figure it out.
Listen, reminiscence of a stock operator, Jesse Livermore. That was his thing. He would add on when they made new highs, add on when it makes new highs, add on when it makes new highs. That was his strategy, and well, clearly it worked for him, at least for a while.
Well, you know how he blew up? That's the Bible for any traders. He blew up by buying them all the way down. He just kept a dollar cost averaging. That's how he blew up. How he got rich was adding to profitable trades.
Yeah. Well, the divorce didn't help either. That's a whole nother story.
No,
anyway,
it didn't help either. Yeah.
So going back to that 50 level, that 49, right now we're trading, what are we, 59.49. And I'm slowly becoming a believer in this, Pax. There's a what we call Jax 2 level at 49.50, which is short for gamma exposure, and you put that 2 there. It's the second most important one. Jax 1 is down at 5,900, and I pay attention to these more and more at that during not only that Friday of OpEx, but the day before and then the Monday after. To look and see how those gamma lines change, if they do change, and where we're trading. And so I'm not surprised we're right at Jax 2 right now, just kind of sitting there.
No, I'm not either. I'm not either. This is going to be this. I just can't stress enough. This is the pivotal price that we need to clear in order for prices for the market to bring in more open interest, for volume to pick up, for momentum to pick up. And when we get that down to those Jax 2 numbers, if we do, then I'm going to be taking profit from opening range shorts, from 59.49. And when we get down there, I'll take profit. When we get through it, I'm going to add below it. and I'm going to take profit at the next level, and I'm going to add below that. And
Yeah.
if the market gives me runners without stopping me out at my entry prices, my stops are always at entry. I don't use trailing stops. And if the market continues, well, I've got a big trade going, and those are the trades that I survived to thrive to. The trades that I'm able to add to that I start catching in a swing sense, or I start catching in a bigger trend sense. It's managing myself, my emotions, my ego, my thoughts, and everything else in between that are going to get me to those big trades. Anybody can make money trading, as has been exhibited here in today's chat. Anybody can make money trading. It's keeping it and growing it and maintaining it over a long period of time. That's the difficult nature of this business.
Oh yeah, absolutely. And it could be, at least for me, it could be a daily grind, right? It's not, you see the YouTube videos with the Lambo guys and walking around with their tigers on a chain and all their entourage. That's the opposite of reality, and that's a red flag on the field. Everybody, you
Oh,
see that you did click to something else, and that's
uh,
just warning all over the place. But so the method that Pax was talking about, and you might have a different method, but every day you wake up with open eyes, ready to think. You got to think.
no, right. Yeah. Not only do you have to think, but you have to be flexible in your thinking. We're traders. We're independent. I don't like the word retail because it cheapens what we do, but we are independent retail traders. That means that as independent traders, I have the ability to be able to change my mind 10 times throughout a particular day. I don't have to get married to an idea. My bias is flat. We get above here, I'm long. We get above here, we get below here, I'm short.
Yeah.
And then in between that, it is getting a lot of sleep. It's eating cleanly. It is lifting weights and running every day, lifting heavy things and running every day. It's praying, it's meditating, it's breathing, it's loving, it's being loved, and taking care of my responsibilities with radical responsibility without beating myself up. It's the ability to be able to live life on life's terms without having to beat myself up for shortcomings and
Yeah.
mistakes. Give myself
No.
some grace and move forward, move on, onward and upward at all times. I don't want to be like Icarus and push that rock up the hill. And when I get that rock up the hill, let it roll back over me. Or
Yeah.
Sophocles.
Yeah, so wise words of wisdom from Pax, and you got me thinking, and I'm going to go off on my soapbox too. Our CEO Marty Franke, when I first met him, he's like, Jim, we're witnessing the rise of retail. And at
Right.
first, I wasn't sure. I was like, "What are you talking about, rise of retail?" I've been doing this for a long time, and I started thinking about it, and I started working here, and I heard other people talk about it too, like Tom Sosnoff, and the retail traders have all the advantages. We have great technology, right? Real-time pricing streaming to our machines. We have unlimited amount of news sources and reference manuals and
Oh,
you name all that stuff. And not only that, exactly what you said. We have the flexibility to trade how we want. We're not stuck with placing large block orders like an institutional trade might have to wait for a VWAP, for a 2-week VWAP line to get hit. Those rules are unique to institutional traders. And then the algo guys are the algo guys. Okay, maybe they have a little bit of advantage there. But other than that, we're sitting in a great position right now. This is really the golden age of futures trading because you could get in and out when you want. You can go long and short when you want, and you write your own rules. You're your own boss, and now you have the tools, the competitive tools, to get a trade off in milliseconds. I mean, how awesome is that?
that is an incredibly important and valuable point. The entry to the barrier to entry when you and I started was you either needed a super rich father, in which case I always asked those guys that were armed with their trust funds to stand right in front of me in the pit because I would pick them apart and send them home to their daddy looking for more dough. Go back to Lake Forest, get more money from your dad. Come sit next to me. I sound like I got off the 35th Street bus, but I'm going to pick you apart, you Weisenheimer. Anyway, the barrier to entry was either having a very rich uncle or dad or something, or you had to work your way up in the business like you and I did. I started making minimum wage on the floor. And by the time I earned my membership, by the time I earned my seat and I earned my place at the table, I was going to maximize that as best I could. And even then, you needed a backer, or you needed at least $100,000 to $200,000 to be able to get started. Now it's, you can open an account with 10 grand, or cheaper, and trade micros, and you're going to learn how to trade then. And anybody that does that is worthy. Anybody that opens a live account, is definitely worthy of my respect and my admiration. Anybody who's got the kartoffels to be able to put their own money where their spirit and their soul is to better their lives and those that they love is somebody I admire. Okay, now the barrier to entry is a lot cheaper. It's a lot more manageable, and we all have the very same I can't think of the word. We all have the very same access. We all have the very same access to technology. We all have the very same access to price. When we were on the floor, when I was in the NASDAQ pit, building the NASDAQ pit, building my own life, I had direct access to price, but I had to do all of this without the use of charts. I stood in the pit and I made the markets and I moved the markets with my own money. I can move the NASDAQ 50 points, 100 points with my own dough. But I didn't have direct access to technology. I had to walk out of the pit to go to a CPG machine to look at a chart. Now, we all have direct access to price. We all have direct access to technology, and we are all on a level playing field. When that market opens, when we sit down, I only have, no matter whether I have a ton of money behind me, or I've only got $10,000 and I need to pay my rent or my mortgage out of my trading account that month, we're all a level playing field. We all only have one trade that we need to worry about. That next trade, that's it. That's it.
No, for sure, absolutely. Let's kind of look at this. I want to kind of talk about get your opinion on the Nasdaq right now. I know we're kind of moving a little bit like the S&P, but right now, again, we have this. I'm going to go back to my call resistance level all the way up here at 21,500. We hit it perfectly. We're tracing back down a little bit. We're above that VWAP right now. How do you feel about the micro NASI or the NASI in general?
So the NASDAQ has taken out their yearly opening range early around in the week. 21,269, 21,347 is the yearly opening range. The NASDAQ is leading to the upside. The NASDAQ has got a lot of room to go, man. I mean, we had equal distance swings. What the market does on the upside, the market will do on the downside, and it will do so in equal measure. And that took us down, if you remember, we talked about it. Saturday, I can't remember what day. Saturday, the day that Saturday, April 7th, or Saturday, April 6th.
Yep, right here. Yep.
On Saturday, April 6th, I tweeted that the NASDAQ equal distance swing wanted to trade to 16,450. So what the market does on the downside, the market will do on the upside. It'll do it from the quarterly pivots. It'll do it from the yearly opening range. That takes us up to like 2,400 or 24,000, 25,000. I've got to do the math and look at it again. But man, alive, we've got a long way to go and a lot of time to get there, as Smokey and the Bandit used to say.
I thought they had not a lot of time to get there.
Yeah, they didn't have a lot of time to get there, but I changed it a little bit. We have a long way to go and a lot of time to get there. So just take it easy. Let the trade unfold. Don't overtrade. Whether you're trading NASDAQ or you're trading S&P, do not let your expenses exceed what you can make when you pay for your trade by removing part of your position. Take it easy. There's going to be huge trades coming for all of us, maybe this month, maybe next month, but they're coming. They're coming. Might not be today. Take it easy. Capital Preservation Friday, baby.
That's right. And speaking of stats, I mean, we're less than 4% off the February highs in the NASDAQ. I mean, that's incredible to me. Down in April, early April, it was doom and gloom, right? We're breaking another 20% after that to the downside. People were, liquidating equities like crazy. Didn't happen.
And then President Trump tweeted, buy stocks. Holy shit, he's crazy. And then we rallied like crazy. But I mean, that's the truth. We were down what 25% in the Nasdaq at one point. The
Yeah.
S&P was down 20%. The Nasdaq was down 25%. Holy smokes! It rallied 21% since then. Okay, at what point? At what point? Because we have not seen a lot of open interest come back into the market. So at what point do the funds and those that generate the volume? At what point do they start coming in and saying, "All right, yeah, we're not going any lower," and they start putting them back on again? We start to see a new leg to this bull market, and that's the whole
Yeah.
point of talking about the early opening range. We get a new leg to the bull market above and below
Yeah.
these levels.
Yeah. Absolutely. Um, there it is. There's an Azzy. So we'll get in more detail. I know
Hey, I would be
Sarah's.
remiss. I would be remiss if I did not say hit the like button. The like button.
Oh, you're right.
Hit that like
You got
button.
you see Pax. The young kids told me you got to say smash that like button. That's
Yeah,
what the
they
young
do.
kids say.
But yeah, but I also hear young kids talking about smashing other things, and I've got 3 daughters, so I'm going to just say hit the like button.
All right, you could gently tap it with your mouse. It doesn't matter as long as we get another notch on the like button. So, and by the way, I'm not sure if I'm supposed to say this or not, but I'm gonna say it anyway. Next Tuesday, Ninja's having another what they call arena challenge, and it's you create an account, you go in there in sim mode, or you use your account, and then it's a competition, right? And there's a leaderboard and all of that stuff. That starts Tuesday. I think you can sign up for it on Monday. I'll show you where to sign up for it. And the bad news for me is they asked me to participate in this in this challenge. So I'm gonna be talking about some trades as well on Tuesday, and we're gonna follow leader. We're gonna have fun with it. It's totally a fun thing, but I just wanted everybody to realize it's coming down. And if you haven't used the NinjaTrader software yet, this is a way to get familiar with it. So you just go to NinjaTrader, just Google NinjaTrader Arena. You'll get access to it, and I think registration opens Monday. I don't know how many seats are available. But keep that in mind. I'm not sure I was supposed to say that. If Shab yells at me in the comments here, then I know I'm in trouble. But I'm giving you guys a heads up anyway.
That'll be really fun. I'll get the link and I'll repost it on X and that'll be fun to pay attention to, especially if we're still churning this dreaded creeping rally market that sucks, that stinks. I mean, that is untradeable.
Yeah.
I'm gonna start using
That's
more
funny.
appropriate terminology.
So Whit goes, it was good knowing you, Jim. I know. We'll do the best we can. That's all you could ask for. Nisa's in the chat. Nisa, good to see you. I'm glad you're here with us today. Nisa's been really an important pillar of the YouTube. I'm sorry, yeah, of the NinjaTrader community for forever. So great to have Nisa here as well.
Hi, Nisa. Are you Greek or are you Romanian? What kind of name is that?
I'll let her answer. She is located actually in Eastern Europe.
Oh, okay. So not too far off.
Yeah, yeah. But yeah, no. Very, very awesome. Anything else we should think about? We got about a minute and a half left, a couple minutes left before we get Sarah in the house.
I think we talked a lot. Let me just sum this up real quick. I think we talked a lot about we talked about a lot of great information. And if you have any questions about any of it, please hit me on Twitter and I'll answer them. I'm not willing to spend any money in this market.
That's a powerful statement. There you go. So now, would you, out of curiosity, are you going to watch, or are you going to go do, your other things? You just
Oh
walk
no,
away.
I'll trade. Oh, I'm going to trade. But I'm just not going to. I'm not going to allow myself to take more than a 2x4 in expenses.
Okay.
There are a lot of times, like in the beginning of the year, where I'm willing to spend some dough to be able to find the momentum. This isn't it. I'm going to take a couple of trades just because of the pivotal nature of this level here. But that's it. 2x4, man. I am not going to let my expenses exceed what I can make when I pay for my trade.
Got it. That makes sense. I hear you. Yeah, that's the whole basis of Capital Preservation Friday.
Oh, absolutely. Survive to thrive.
Survive to thrive. That's just so much like Survive to Drive, that F1 series.
Yeah, yeah, but yeah, that's true. That's a good point.
Yeah.
That was a great show.
Hey, it's a great show for sure. I think they're in China. They might be in China or no, they're all in Australia, I think, racing on Sunday. I think it's Australia.
The show's great. The actual racing, I don't understand.
I watch it. I mean, it's addictive. Once you start, you start. But anyway, that's a whole nother conversation, Pax. Listen, man, thanks for being here with us
Thank
on
you,
Friday.
Jimmy.
Happy Friday. You guys have a you and your family have a great and glorious weekend. I can't wait to talk to you again next Friday.
My daughter Marguerite graduates high school on Sunday, and then I've only got one left after that, and I'll be an old man. All five of my kids will be off flown to coop. So
All
thanks,
right, all
Jimmy.
right. All right, all right. All right, man. I'll see you next week. Next up, don't forget, it's Friday, and then we have Sara trading live. Sara Strat Sniper is going to be in the house in a couple seconds here. Good morning, Sara. How are you? Oh,
I said, "Hi, Jim. How are you? How was your vacation?"
yeah, it was nice. It was just a couple days down in Monteverde, which is just south of Jacksonville. I went for my godson's confirmation. I got to see some good friends, and it was nice. It was in Florida though, so I creeped into Florida, and I survived it, so it was good.
Well, good. Florida's great.
Well, yeah, but you're biased.
Well, only now because I live here.
But you weren't
It's beautiful
originally
and
from.
sunny. I mean,
Where were you originally from?
St. Louis.
Oh, oh, that's SLU University. There you go. We got St. Louis University there. I visited there for college tours with my kids. It was a nice campus.
Yeah. Oh, and congratulations to Pax's youngest on graduating high school. That's awesome.
Absolutely, absolutely. So, how did it go last Friday?
Last Friday was awful. We stayed an inside day all day, which I was like, I'm not clicking buttons. And some of the people in the chat were bored. And you know what? If you're trading right, you're going to be bored most of the time. So, yeah, we didn't do anything
Yeah,
last Friday.
yeah. Many years ago, someone wise told me, this is the best, most boring job you could ever have.
Yeah, it really is. I mean, most of it's waiting. But people get so excited, they just want to click buttons, and then that's when they get chopped up. And so the thing about us is we know when we should be trading and when we shouldn't be trading. And we like to tell people today's not the day. Go outside, go do something, go handle your adult life things, go golfing, go to the pool, go do something else. Do anything but sit here all day because you're only going to hurt yourself.
Yep, that's good advice. Any kind of initial thoughts about how today's brewing?
Yeah, I mean, we've been bullish for a couple weeks now, few weeks. So yeah, we're still bullish. Let's see. Hold on. How many weeks have we been? 4. 1, 2, 3, 4. We've been bullish for 4 weeks now. And I know last Friday, Pax and I both had the same sentiment that we both see all-time highs coming, likely by the end of June, just based on timing and monthly and quarterly chart setups. But if not, by the end of June, soon, as long as we keep above last month's highs, that's where we're trying to go, is new all-time highs.
Yeah,
And we're well
yeah,
on our
that
way.
seems.
So it's cool to see.
Yeah, yeah. I think there's a lot of folks jumping on the bullish bandwagon now. So we'll see. I'm cautiously optimistic.
Yeah, I mean, it's going well. We're
All
only
right, all right.
halfway
All right,
through
well,
the month
Sarah,
of May, and we're already already have hit our monthly target on NQ. So that's nice. And I'm gonna talk about it when
awesome.
we start doing the Strat Sniper stream.
Well, we're going to start doing it right now. I'm going to sit back, take some notes. Thank you for being here. I'm glad I'm back with you on a Friday, and best of luck. I'll be behind the scenes.
All right, cool. I will talk to you when the stream is over. Okay, let's talk some Strat. Okay. Now I've lost my picture. Hold on. So I wanted my picture up. So what's happened this month is we've been bullish all month long because we had these monthly hammers on all 4 futures or indices. And what we call this is a simultaneous break, which is when all 4 futures are doing the same thing at the same time, which is a very powerful thing because it just tells us that there's algorithmic buying and everybody is long. We can see it because we know that it's happening in the candlesticks, right? So for all of May and even prior to May, we've been bullish. Now, all of March, we were very, very bearish. Half of April, we were bearish, but that changed on a weekly time frame, and I can talk about that there when I go down to the weekly charts. But the thing about the Strat, so I always kind of like to give a little recap of the Strat, just getting into the morning stream, because a lot of people don't know what it is, but it's a very objective, unbiased look at price action, and it really can't be disputed. And so that's what's so cool about it, is there's no feelings, there's no guessing, it just is what it is. And so there's 3, we call them universal truths, which is scenarios. There is only 3 candle types. There is only an inside bar, an outside bar, and a directional bar. So we have 1, 2s, and 3s. So an inside bar is a 1, a 3 is an outside bar. There are 2 types of 2s, which would be a 2 down and a 2 up. And all that means is, and I have the indicator on my chart just for you guys, like I don't use this anymore. When I was learning, honestly, in fact, when I was learning, I didn't use them either. I only use them for teaching because you need to be able to identify these on your own. And the thing about indicators is they can be wrong. So you just need to be able to identify what a 1, a 2, and a 3 is. Let's see. I don't see a 1. But a 1 is an inside bar, where the high and the low fit completely inside the previous candle's range. It's an inside bar. An outside bar, often referred to as an engulfing bar, takes out the high and the low of the previous candle. So for instance, this candle here, this is a 3. It took out the high, failed, and then took out the lows. So 1, 3. Then you have a 2 up and a 2 down. And a 2 up, all that means is it took out the upside of the previous candle. And a 2 down simply means it took out the downside of the previous candle. So there's technically only 4 candle types, which is, it's very simple when you understand it, and people confuse colors with direction. But even though this is a green candle, people want to call this a 2 up, but it's not. It's a 2 down. It's a failed 2 down, but it's a 2 down because it's green. And then we use full time frame continuity. And what does that mean? It means trading in the direction of multiple time frames and in alignment with the trend. So to have full time frame continuity, we want at least 4 time frames in succession, all the same color. So what that means is it could be any 4 time frames really, but we mainly focus on the month, the week, the day, and the 60. So we want those all to be the same color. and trading in that direction, okay? And then knowing what we know about candles, there's only a certain amount of ways that price can reverse or continue. And that's what this Strat cheat sheet is, right? So we had all these monthly hammers. So this is a 2 down, 2 up reversal, which is right here, right? So if you look at NQ, actually that works because we're focused on this one here. If you look at NQ on the monthly chart, this is a 2 down, 2 up reversal. You'll notice the trigger is above. So this, the third candle is always the live candle because people often ask, well, do you wait till they close? No, because you'll miss the entire move. So this would be April's candle, right? And then we open May and we open green. So the trigger is to be long above April's high, targeting March's high, right? That's just what it is. So if you look on the chart, this is the monthly chart, long above April's high, targeting March's high. So NQ has already hit its monthly objective, right? But if you go to the quarterly charts, okay, that looks different. Hold on. Something's wrong there. If you go to the quarterly charts, we are trying to become an outside bar, so an engulfing bar on the quarterly. So we are expecting new all-time highs because we know how threes happen. You take out one side of the range, you fail it, you're looking to take out the other side of the range. So that's a 3. I'm not sure why that shows like that, but so yes, so we've been bullish for quite some time now after being bearish, but that's all good. I mean, charts move, you have to be able to flip your bias and trade what you see and what you know to be true. And what we know to be true is we have, I think only 3. We've got 3 out of the 4 taking their months to the upside. Now, NQ is definitely the strongest. ES would be second. RTY would be third. YM would be the weakest because YM has not triggered its monthly reversal yet. So it's not trading above April's highs. So we've been bullish, have been bullish. There's no reason not to be bullish. And the thing about outside bars, this is so crazy. Hold on. Oh, I did want to mention, I mentioned in YouTube chat that today is OPEX Friday, which typically isn't the best trading day, but I have a question. When consecutive candles have equal highs, lows, what type are those? So if they have equal highs and lows, those are still considered an inside bar. And the reason is because people put their stops above candle highs. So you must break one side of the candle to be anything other than a 2. So if it's equal highs, it's still a 1 because they're going to have their stop 1 penny above that high. So it must break one side of the candle. And that's a good question. I get that a lot. So an engulfing candle, it's easier for me just to like draw it. So say you've got a candle, and then I can't really draw. I mean, I could try and draw wicks, but it's going to take me too long to figure it out. Oh, okay. Well, So we're always focused on highs and lows because that's where people's stops are. So an engulfing candle is the candle's highs and the lows. So you'll notice, like say this was a red candle, this is the open. We traded above the previous candle's high and failed and started coming back through. We're looking to go take out the lows, right? So engulfing is in the strat, we're always using highs and lows. We're never using candle bodies for entries or stops. We do use candle body opens for time frame continuity, but not as far as our strat setups. We're always using candles highs and lows. Solanki, I did post it on my Twitter, did it not? Maybe it failed. Twitter does that. Ooh, Twitter does that to me sometimes. Hold on, let me just look here. No, I posted it on my Twitter. Are you talking about this live stream? You can get the strat cheat sheet in my pinned tweet on Twitter. Sorry, I can't say X. What is OPEX? Option expiry. The third Friday of every month. Yeah, just go in my pinned tweet and you can save the image there. Okay, so we have a bright green month, we have a bright green week, we have bright green days. Yesterday was pretty awesome. This is a great example of an outside day, which we were calling for 30 minutes before the market opened in our Discord. And I'll show you why. I'll show you even the entry. I just wanted to kill that alert. So we have full time frame continuity to the upside, right? So the quarter is green, the month is green, the week is green, the days have all been green. So yesterday we opened, triggered the day, the inside day down. Now you have to realize the candle didn't look like this, right? It looked like this coming into the morning. None of this up here existed. And so knowing we have full time frame continuity and everybody's a buyer this quarter, this month, this week, the day was yet to be seen, but there was a setup in there that we took and we were calling for an outside day because what I just talked about, outside bars form when you fail one side of a range and start coming back through the other side. We're looking to take out the other side of the candle. So we were calling for an outside day, meaning when we were down here, we were saying that we were going to hit 59.25. That was our target. And then ES actually had another target of 59.38.25, which it also hit. So knowing what we know about ranges and candle types, there's only 3 candle types. We found an entry on the 30-minute yesterday. And it was this one right here. So we had a 2 down, 2 up, negating the inside day and down because they tried to short it again and it failed, couldn't stay below the previous 30-minute low. So they failed, right? So that shows us that the bears are weak, and they are, just knowing what we know about full time frame continuity. So this was the 30-minute trigger yesterday. And target 1 was to become an outside day. And I also posted this on my Twitter. I posted it late, but the timestamps for when I said the things that I said are in the tweet, and they were very, very early on. It's just Twitter people get things later than I post. Anyway, so we hit outside day target. So you can, take partials there. If you want to leave a runner, that's fine. As long as the 30s don't reverse, you're still good. And then the trailing exit yesterday was if you got a 2 down, because you'll notice this triggered and went right away. And the reason also this was so powerful and strong was because we had a simultaneous break on the 30-minute chart. So all the futures were going 2 up on the 30-minute, which also changed daily continuity. So everybody was buying, and we love simultaneous breaks. It's very strong, and your stop can be as low as, because with a simultaneous break, you expect it to go right away. So once it triggers, you can have your stop right here because you don't want it to come back in on you. And if you want just like a more, you could use a 50% stop of that candle. So that's the trade that we took yesterday. We hit the last close by daily target on ES, and then it kind of just chop-chopped, right? And so this is when we'll say the easy trading is over and go do something else. And that's what we did. We cut our stream early yesterday because the easy trading is done. Okay, so for today, as stratters, what we need to see is so what this is doing, this is a broadening formation. A 3 is a broadening formation on a lower time frame. I can show you the hourly. It's pretty awesome. This is not like the most perfect example. High. Wait, hold on. I started that wrong. Hold on. Low, high, new low, new high, new low, new high. And again, our entry was somewhere around here to come back through this range. Okay. So with broadening formations, you have broadening formation risk, meaning you can fall back through the broadening formations. Now, broadening formations don't broaden forever. That would be so easy. Everybody would be a millionaire if that's all you had to do was short at fresh highs and long at fresh lows. Like that would just be amazing. But that's not how it works. So usually what happens is you get a broadening formation, you stop out longs because by making new lows, and then you will typically expand in the direction of full time frame continuity. So meaning we want to stay above this high after stopping out these people, right? So they're like, oh, stop hunts. No, just broadening formation and how price action really works. So with that being said, knowing that we have a broadening formation for today to be bullish, and here also lies another issue, which I'll explain in a second. But for us to stay bullish, I talk about lines in the sand a lot. We have to stay above yesterday's highs in order to be bullish with this 3-2 continuation. That just is what it is. We have to stay above yesterday's highs to be bullish. Now, the problem is, here's the problem I see with today. This candle is so big, and that is the only next target, which is also, it's the monthly target for ES. And like I said, NQ has already hit its monthly target, which was 21,349. And I posted on Twitter a while back. You can go look the targets for this month. So NQ has more easily attainable targets. We actually have, we call these target clusters. So we like these. So there's 3 consecutive targets real close by. Problem is, NQ has not taken out yesterday's highs. So until NQ can take out yesterday's highs, we're obviously not going to be able to hit these targets. If NQ stays an inside day, it's going to be a boring day. Now, if you look at RTY and YM, we are still stuck mother bar. And what I mean by that is this big candle, right, on 5/12, we have been trading 1, 2, 3, 4. We are 4 days stuck inside. So this is what we call chop shop. This is not really something you want to be trading. Still an inside week. Nope, not an inside week. I guess that was Monday. Oop, I didn't want the 12-hour. I wanted... Yeah, okay, that was Monday. So obviously not an inside week. But we've been stuck inside here the entire week. So this is really not moving. Same with YM 561. We came within 2 points of hitting the mother bar high on a 3-2 continuation, but still 1, 2, 3, 4 days stuck inside Monday's range. If you guys remember, Monday was that huge gap up day, which was awesome. And to be honest, I haven't been doing a lot of day trading. I've been swing trading, which has been going good. It's kind of a skill I've been personally working on for a long time, but it wasn't until this year I decided to actually put effort into it. And it's been going good. And the candles seem to be getting smaller. Let's look at the volatility is definitely dropping off. So just like the two down, 2 up reversal in all, well, 3 of the 4 futures, VIX is doing the opposite, which you would expect, right? So this is that's a big wick. I miss up there, but this is a 2 up, 2 down reversal, and it's almost at its monthly target. Okay, and it's potentially an outside quarter, just like ES, just like all the futures or SPY QQQs. So it lines up, right? I wish we had volatility at 50 all the time. But as traders, like over the last, I've only been doing this for 7 years, but over the last 5 years, we've been blessed with like very high volatility times, which has been fun. Okay, so the market is going to open in 3 minutes. Let's go down to the lower time frames. Okay, so this takes practice, but you can see a little broadening formation here. So you have a high, a low, a new high, a new low. So anybody who was long and using, why didn't that delete? And using this pivot as their stop just got taken out. So that's what we like to see. I don't think we're going to go double outside day. But if we're trading below yesterday's high, we have the potential to go 2x outside day, which I don't think is going to happen. So what we want to do is we want to stop people up. Okay, right there. That's the point I was just going to make. We want to, I don't know what just happened at 9:28. We want to stop them out, and then we want to look for longs back the other way. And this is how we trade our broadening formations. So anybody with stops there just got stopped out. That must have been a giant 1 minute candle. Yeah, because I just pointed out that that is where people's stops were. And then on the 1 minute, you got a 2 down, 2 up reversal to trigger the day, the 3-2 day. So that's what we want. We want to stop people out and then reverse. NQ had the same level. Because we know where traders are taught to put their stops, right? They're following the trend, so they're using higher lows. When price starts reversing and coming back in, we're going to take them out. That's just how it works. So RTY People stops are down there. That's the last higher low in the trend, right? YM, people stops are there. So they're trying to go stop them out. So what we look for is reversals back up. All right, market's open. Now, if we fail to stay above yesterday's highs, we would look to go take these people. That would be the short target. And as of right now, we are failing to stay above yesterday's highs, which means you have a potential 3 on the day. Now, NQ, again, NQ is going to be the least fun one to trade because we are an inside day. So if you're trading anything today, and again, today's OPEX, I would stick with ES. Okay, so do you see how YM took out those stops? That was the downside target, right? So that was downside target 1. Downside target 2 would be these guys. Now, once you take out stops, this becomes a level of potential exhaustion risk because you stop people out. So now you want to see it, you have to wait and see if it continues or reverses. RTY is getting really close to stopping those people out. And we always want to trade against the losing traders. So that's where people's stops are, right? And then target 2, because RTY looks pretty weak, target 2 is there. Stops. I have not been looking at the chat. Okay, YM took everybody out. RTY is about to take out the 2098.9 people. So that would be your downside target if you're trading the open, just like YM did, right? So far, ES is failing to stay above the previous day's high, which means, did we turn the day red yet? Not yet. So the open is there. That would turn the day red. And the thing about it is, even if we get a little corrective activity, how are you going to turn this week around? Like, this is a giant green weekly candle. And we like trading big red and green bars because we know that's where strength and weakness is. RTY did hit an important target because it's a pivot high target. And then again, YM is still weakest because it has not triggered the month. But depending on how we close, we're a lot closer next week to going 2 up continuation again. This last week was pretty much a momentum hammer, and we went 2 up again. So we've actually been long since turnaround Tuesday down here because we know how outside bars happen. We had an inside week, triggered to the downside, came back in, then we got a turnaround Tuesday, which is a 2-2 reversal. So we reversed Monday's direction, turned the week green. Target was to go outside week. We did, and then we even hit this target that week. So we've actually been long since here. And then there was an add here on the 3-2 continuation week, which is what we want to see happen today. We want to see them go 3-2 continuation day. This is YM is just stuck. RTY is stuck. NQ is currently stuck. What I have to see what Tesla just did. Did it hit the 355 target? Okay, great example of a 2 down, 2 up reversal. Entry long above yesterday's high, target 1, target 2. So Tesla worked. I'm not sure if Alex is streaming today or not. And that's on the strat sheet, right? That's a 2 down, 2 up. It's the exact same thing that we're trading on the monthly. It's all fractal. So whatever time frame. So entry long above, if this is a daily chart, which we're looking at, a daily chart. If this is a daily, long above yesterday's high, target previous day's high. So long above yesterday's high, target previous day's high. And then you've got a major, not a major. Then you got to look left for targets. So the next target on Tesla is 355, and I don't think I have an alert set. Nope, yes I do. And I kind of expect Tesla to hit that today, but we'll see. All right, so YM, RTY took everybody out. So they all took out their downside targets. So now we don't know. Now you got to wait. So if you were short, that would have been your where you cover, right? NQ, double outside bars. So the broadening formation is expanding. And you could draw it. High, low, new low. Since we're below the previous low, it's expanding to the downside. It's attempting to come down here. Interesting. Real estate is the strongest sector today. Just noting. And basic materials is the weakest sector. So what can you do with this knowledge? You can go to lower time frames and try to find a way in. That is a big wick. That's what she said. So we have an inside 5-minute on ES. I wore a Dunder Mifflin Paper Company shirt yesterday. We're only 9 minutes into the open, sir. Settle down. So the Strat trigger would be an inside bar and down. So below here. What I actually prefer is when we tick up and then come back in, because then you got a potential outside bar and you have a much better entry than entering down here. Why don't we just try and because I kind of expect it to go inside and down. And then what is our target? 592725. Oh, that'll work. So we want it to go inside and down. We got all 5 of the futures are red. Okay, and then move your stop. We want to be right, and we want to be right away. We don't want it to come back. 592725. That was a bit of a ninja entry. Typically, you shouldn't have entered till we went inside and down, but I was willing to risk it because I know what our downside target is. So, all right, so I'm break even. I don't care what happens. I'm good, right? 10 points. Now, I'm not trading for size here, people. I'm trading to teach you guys the strat. So don't laugh at my one MES. Just listen. We got 2.5 minutes left on this 5-minute candle. Let's see if we can hit our target. That would be sweet. Don't get cute. So like Pax and Jim always talk about on Fridays, Capital Preservation Friday. Capital preservation is every day, right? So get to break even as soon as you can, because you can take, you can take 10 stop outs as long as your stops are tight. The ones the ones that go are going to go, and they're going to cover all your stops. But again, we want to be right. We want to be right away. And when we're not, we get out. And this is just not puking like I wanted, but I don't really want to go to the 1-minute chart and look like a crackhead in front of everybody, but we're gonna. Okay, so we got a 2 up that failed. A potential add would be below here. They're going to broadening formation this thing. If they don't go 2 down right now, they're coming back up here, and I'm going to get stopped out, and that's fine. Maybe I'll get a 1er entry. You know what I didn't do? I didn't lose any money. That's the goal. limit? Nope. Then we get back in, we do battle. We got a new 5-minute candle open. I'm thinking they're going to go up here and do a broadening formation, but we'll see. How tight is tight? Real tight. Well, the problem with NQ, like I was saying, is it's an inside day, so it's going to be less favorable to trades. We don't micro shame here. Thank you. Telling you, they're going to go stop these people out. Okay, so this has to die. You got to mind the flips. Every new 5-minute candle has the potential to change continuity. So if I pull this over, I'm looking at all 4 of them happening on the other chart. So the last 5-minute candle was going good. Then we got a 5-minute flip, which all a flip is it's a new candle. It's a new candle opening, and it has potential to change continuity for 5 minutes. Let's go to the 15. Sorry. So we're inside 15. So not ideal. So we will wait and see if we get a 5-minute back down. I was just hoping for fast selling right to that target, but didn't get it. Did we stop them out yet? Not yet. Go take out that high. That's what I would like to see. Stop them out and then reverse. Because anybody short, using the 1-minute trend, their stops are right there because that's where people are taught to put their stops. So we'd want to see them go stop them out and then reverse for our broadening formation. I could go down to a 15-second chart and really look like a crackhead on TradingView. I don't think we have some red folder news in 12 minutes, FYI. See, I want them to take out a pivot high first before I try to re-short. And if they don't, then I probably won't hit any buttons. Ugh. Man, these screens are little. I'm used to my home screen, which are big. I could have attempted, I was screwing with my chart. I could have attempted a short right there on the 2 up, 2 down. But still, I would have preferred they took out a pivot high. And I already would have been stopped out, so that's why I want to see what I want to see. I'm going to go to a real small time frame chart on TradingView. I need LASIK, guys. I can't see anything. I have astigmatisms in both of my eyes. Okay. Just stop. ES didn't. MES did, but ES didn't. Come on. Tick one more higher. No, don't leave equal highs. Nobody likes that. Not for right now. Not for our purposes right now. There we go. One more. There you go. All right, so there's your broadening formation. You could view it as high, low, new high. So what I would like to see is a reversal back down, because we're still below yesterday's highs, except all of a sudden and I don't really want to get in a trade right before news, but I will. $39.50, perfect. And then my stop would be right above here, and I'm targeting somewhere down here. So we'll see. But you see how we took out these highs? Oh my gosh, the 30-second chart is like... Come on, buddy. Okay, we're still inside 15. Yeah. Okay, perfect. I almost missed that slide in my little order around. Gotta be quick. Again, there is news coming out in 8 minutes. Okay, so I don't want to see it go 2 down, 2 up. So I'm lowering my stop a little bit. 42, yeah. Because I just wanted it to puke. So I don't want it to go up. Because we know what reversals look like, and we don't want to see them. Elaine's here. I like running formations and I cannot lie. We're always making up nerdy trader songs. She's really good at it, though. She doesn't use AI. She uses her imagination. Imagine that. Yes, Elaine Bennis, Seinfeld, for sure. Long now, price gonna rip? Well, I don't know what's gonna happen when the news comes out. Oh, I gotta move my stop again. Oh, I got stopped. That's okay. I'm not gonna do anything else till after the news, because that's just stupid, honestly, to try and do things before news comes out. Elaine. Five minutes, 5 minutes till something. I got stopped out by 1 tick. That's my alarm that says news. Oh, I want to try again. No, I just said I wasn't, so I'm not. But if news wasn't coming out, I would definitely short there. I want to, but no. Smack yourself on the hand. If you just said something, stay true to it. So, possibly, the way that this 15-minute candle is closing, we are a lot closer to going inside and up, which would re-trigger the 3-2 day. And you see what here? Remember how I told you once we stop out, now we don't know, then you can look for reversals back the other way. That's exactly what's happening on YM and RTY. And then these guys are trying to do 3-2-2 reversals. So if that's true, my bias is going to change because we're back above Friday's high. Like I said, you can't be long. You can't be long unless you're above yesterday's high. And that's what that line is. Let me delete this. 5944.5. And we're about to get a Strat reversal, which is a 3-2-2 reversal. Problem is, there's only 3 minutes left. You want it to stay an inside bar. If it stays an inside bar, and then we're looking to go up there. I know it's like, what? Oh, please stay inside. But if it does stay inside, then your upside trigger is there. And we did take out a pivot low. We didn't take out this guy, but our broadening formation would look like this. And this is kind of what I mentioned is we want to stop people out and then we want reversals long. We got a 5er down, didn't go anywhere, failed. So now I'd be looking for new high of day if we go inside and up on this 10 a.m. news. And again, we're a lot closer to going inside 15 and up. Right? So you want to see it trigger right away, hit that target, and then maybe it takes another 15-minute candle or so to get up there. Now, if it fails the inside 15er, different story, but we'll see. NQ has the same broadening formation. Didn't take out those major lows, which it doesn't really have to, right? We have full time frame continuity to the upside. So as long as we're stopping somebody out, that's cool with us. We got 55 seconds till the news. Personally, I don't care what the news is. I can see it in the chart. Tracy probably hates that comment, but yeah, we don't care. We just want to see it trade above that.
Hey, Sarah, how are you?
Hello, sweet pea.
Love seeing you next to me.
I know.
I love having you in the studio.
She's right there, guys. She's 6 feet from me.
So we have data. We have University of Michigan sentiment and 1-year inflation expectations and 5-year inflation expectations. Sentiment came in at 50.8, well below the survey, which was 53.5. So sentiment is poor. 1-year inflation expectations came in at 7.3%, much higher than the anticipated 6.5%. And 5 to 10-year inflation came in at 4.6%, again higher than the 4.4% prior and surveyed. So looks like consumer sentiment is down and they're expecting higher inflation according to this survey.
Thank you.
All right. All right. We'll catch you later and leave you back to the strat. Thanks, guys.
Thanks, Tracy. Okay, so what happened? They went inside and down, but not holding below the down. Ugh. OPEX Fridays. News Fridays. This could. That's why I said I don't want to trade before news, because that thing in like 5 seconds. If you're not trading with stops and you're trading with news, ooh. But never trade ahead of the news. I feel like that's a safe thing to do. We're not in force. So we have an inside 15 and down, but we're not below the inside 15. So I can hear myself in that echo. It sounds a little strange. It also sounded like a robot was talking. So potential for an outside 15er. Let's see. I don't think anybody should be clicking buttons right now. Let this settle down a bit. But failed the inside 15 and down, trying for a potential outside 15. What's the 30-minute looking like? We have a 30-minute potential hammer. Still to get up there. Needs to go in force, though. Be really cool if we got a 2 down, 2 up fiver. But seeing as how this candle's so big, you would have a very large stop, which, well, not really. You could have a tight stop, but you'd likely get stopped up. Also, we are inside 60s on all 4. And inside 30s on all 4. Nope, all 3. ES, NQ, RTY. We're inside 30s and 60s, which means chop chop. Yeah. That's why we don't trade ahead of news. We are also inside 4 hour. A lot of inside things, which happened last Friday too. Last Friday we were inside days on everything, which no mas. Price is not moving in any certain direction. I would like to see ES trigger back above yesterday's highs, but we'll have to see. Looking like it. So if you get a 2, I'll try again. Wow, I'm nailing the crosshair entry. So my entry is 1 tick above this candle's high. Target 1 would be up there. And we might not get it, and that's fine. Okay, now I really don't like that entry because now we're halfway down through this candle and my stop would have to be too big, so I'm pulling it. Maybe we stay in inside 5 minute. I don't know. We have to see. We're still below yesterday's high, so if we go inside 5er and down, I might try another short. You guys are probably getting whiplash. There's just no easy direction right now. But yesterday's high, again, is the line in the sand. You can be long above it. Kind of want to be. Just got to be nimble, you know? We never say we have a feeling. Market doesn't care about your feelings. Ugh, I just got cold. This candle closes in 2.5 minutes, this 5 minute. I wish we could have traded here yesterday. That would have been fun. That's the problem with only coming in once a week is you just get what the market gives you. Please stay an inside candle. Nope, ES already triggered it to the upside. That's strange, and MES didn't. It's not holding above it though. All I know right now is where is a rectangle? We are stuck in this range. That is your inside bars. We're just chopping around in here. So there's no direction currently. We're literally, this is what we call a compound inside bar. And you see it by training your eyes, low, high. So we are an inside bar to that range. So nothing cool. Nothing cool to see here. Hi, Frankie. Who else is in the chat with us? I know Elaine. Frankie, aka Sand Dollar. Screaming hamster. Hector. BT, what's up? What's up? Mike, what's up? Yeah, today's PA sucks. Pax was right. He said today's going to suck. He wasn't wrong. I don't have a bias at the moment. I am not short nor long. We are right at yesterday's highs on ES. So there's no bias, because in order to be long, we have to be above yesterday's highs. To be short, we have to be below, but we need an actionable signal in force, and the 15-minute failed because of news. So I'm neutral right now. Oh, I would love a Tuesday stream. Turnaround Tuesday. And maybe we can switch me. I don't know. I'll have to talk to Crudele. I don't think I can. I don't know. They have a whole lineup. Friday's probably the worst day I could have picked, but that's what they wanted. Nice, Bradley. Take a deep dive into the strat. You can go to my YouTube and watch my Stratification playlist. Yeah, Tuesdays would be fire. Mondays can be really good too. I stream on Mondays. Yeah, too bad. You always lose money on Fridays? Stop trading Fridays. Could take that 5 minutes short. I just don't like how inside we are on everything. Ooh, but we got equal. Ooh, maybe we'll attempt it again. What is the target? I keep forgetting. 27 and a quarter. It's already not going well. Because we're stuck. Go take out those equal lows, buddy. What is that line? I don't even know what that line is. Ugh. This is what happens when you try and trade an inside 60 and inside 30, but also when you're streaming, you feel like you should click buttons. 4 people. Oh God, we have equal highs up. It doesn't look like, okay. We're still in that 5-minute news candle. So not only are we inside 60 and inside 30, we're inside the 5-minute news candle. I was hoping this could get us out of it, but did not work. And there's only 45 seconds left in this 5-minute candle. Yeah. I mean, I'm not losing any money, really. I'm trading very small. Yeah, guys, like and subscribe. Subscribe to NinjaTrader. Get the notifications. They've grown a lot since we started doing this. I've been watching the numbers. I subscribe. Let's see. Let's go look at another time frame. 15. We are. This is chat. Watch. See this 15-minute candle? 15 minutes, 30 minutes, starting 45 minutes, stuck. Not doing anything. Boo. Boo, boo, boo. Ooh, I just want to show you an example of the Strat and Tesla. This is where we take profit. Why? Because that's where you're supposed to. Wow, we got to go to a 5-minute to see what happened. Okay, so long trigger 346.14, target 350. Okay, so you take partials there. If you're trying to leave a runner, you have to get out on a reversal against you. So you would have lost a little profit. You would have lost $1.30 in profit. But that's what happens. Then they made a new low of day. So trigger, target. Target means do something. Click a button. Something's supposed to happen there. You know what I mean? Cool. Uh-oh. Okay, can we trigger something to the upside? YM tried and failed. Inside, inside, inside. We have 13 minutes left on the 30s. And if that triggers, then we are back above yesterday's highs, which would be good. That trigger is a lot further away. Again, if you're trading anything, I wouldn't be trading NQ because it's inside day. So you see this big range stuck. ES at least made a new high. Now, maybe we get a domino. Doesn't matter, it's too close. I would still, we can try. So this is a domino, a 5-minute to trigger a 30-minute. If I would have been, hold on, let me get rid of this guy. Yeah. I'm a little late. Damn it. Darn it. Sorry. Okay, well. Okay, I was late to it, but the 5-minute here, let me pull this back over because that's MES, so it doesn't track properly. But that was the 30-minute trigger. I'll click the 30-minute chart again. So that was the 30-minute hammer. And so what we look to do is take lower time frame entries that can trigger it. So you had a 2 down, 2 up, 5-minute that triggered the 30. So this was a good domino trade. And your target is still going to be up there. I missed it because I was charting. MES again, it still didn't trigger. Let's keep it on this guy. So once your 5-minute triggers your 30, if your stop was down here before or here, now you want to move it up to be able to be break even. Because again, the whole point is to not lose money. If you make money, great, but don't lose money. And we're trading back above yesterday's high. Okay, you got a new 5-minute candle. So definitely important to get to break even because you want to see it continue up. New 5-minute candle brings potential for things to turn around. And we're still floating around the previous day's high. So you want to see it go 2 up and then come and hit this guy. And we're also diddling around the 30-minute trigger. Now, so far this is okay. It's not a reversal of any kind. I wish we always had great Fridays, but we don't. It might not move till we can trigger the 60. But we're hoping that the 5-minute can trigger the 30, which can trigger the 60. That's the intent here. Wait, I missed something. Hold on. Hey, thanks, firefighter Sheehy. He's one of our members. We talked about Tesla last night, didn't we? Yes, we did. So now you got to be careful of potential broadening formation in here. And what I mean by that is taking out highs, failing, potentially can come down here. But you would need an inside fiver and down for that to happen, which you don't have yet. So can't get too good. No fires. Oh, I still have to tell you that funny joke. I'll have to DM you, but I don't really do the DMs in the Discord, so. OPEX Friday, folks. Where are you going on vacation, Chris? Hi, Carlos. I did not take a trade. Well, I took a couple, but none of them worked because we're inside. So just kind of came in and tapped the 5-minute trigger to trigger the 30. Maybe we can get an entry here. Hold on, let me move this. The 5-minute. Because it's kind of hammering. Eee. Price action is just like, blah. Got a new 5-minute candle in 10 seconds. I don't want to put the order in until it's close because it likes to. And again, we're targeting up there. And if it triggers down, then it's a potential outside 30 to the downside. So you could take either. You could take the inside bar up or down. We are directly on yesterday's high. Oh my God. Do something, charts. Today's a day. I tell you to go to the pool. Maybe I should get 2. I should have got 2. Because I want to take 1 off there. One market. 59, 51, 25. Move. Move your booty. Okay, I'm going to raise my stop just a little bit. Just a little bit. Just a little bit. Can an inside day become a trending day? An inside day usually becomes a broadening formation day. So what we had happen was we had the 5-minute reconfirm the 30-minute to try and go and trigger the 60-minute. It's just zero aggressiveness. Kind of boring. Go up there and get. Don't let that be exhaustion. Go, go. Come on, NQ. NQ is not helping us. NQ is being laggy. Look at that. Look. Okay. If I get stopped out, I'm not taking any more trades. This is garbage. Boom, I'm done. So that domino did not work. Now we're negating the 30-minute trigger because we're unable to stay above it. So if I show you the 30, that's the trigger. If you can't stay above it, can't be long. Ow. I think my legs are falling asleep, guys. I usually take a break by now. Ooh. Ah, sitting funny. Maybe my brain lost blood because my leg is numb. Yes, mind the flip. This is just chopping around in here. It's literally not doing anything. Look at, well, NQ actually has a nice broadening formation, but It's just not doing anything. Green, red, red, green, red, green. Green, red, green, red. Failed to green, red. Well, at home I can usually, like, I don't have a standing desk. Oh boy. They're going 15ers back down. Watch this be the one that work. Oh, I kind of want to try it again. But now I'm late. This is a teeny tiny range, so I really don't care if I get stopped out. So, what is it? 27. $25. Only reason is because we took out those highs, and then we've got these equal lows down here. NQ's trying to take out those lows, and then these lows. Aw, that's cute. Justin's trying to make a "that's what she said" joke. So cute. Oh my God. NQ is about to go inside 30-minute and down and start puking. RTY is close to inside 30 and down. ES is not as close. Just need somebody to do it first. It looks like NQ. It's going to be NQ. Oh God, this is rough, guys. Go take out the stops. Do something, would you? Just anything would be great. Come on, NQ, you're almost there. Do it. I know. But I saw a broadening formation and I had to. Bust it, NQ. There you go. So NQ took the inside 30 and down. If I had more than one, I would take profit right there and there, but I only have one because I've been stopped out too many times. NQ is trying to come down here. 360, 50. I got 25 minutes on this 30-minute candle. Yeah, the stop is tiny. Even though it looks big, it's like 4 points, which isn't like nothing. Get ready for a buy at what? Oh my gosh, I can't. Ugh. Maybe I need to go to the eye doctor. 21,367. Oh, the lows. I mean, maybe. That's where it's trying to go. NQ's definitely weaker. And again, the higher time frames are bullish, but lower time frames, not so much. Ooh. Thank you for mentioning the 4 hour. I didn't even look at it yet. The 4 hour trigger on ES is okay, this is getting ridiculous. 5931.75. I literally had to pick up my computer to see that. Ugh. ES, let's go. Come on. Do your job. ES needs to break 33. Which is basically that low. This took a long time. So once NQ hits the target, then my ES short becomes exhaustion risk. So once NQ hits its lows at 361, then I got to move my stop to break even because we have the potential to reverse. Golly. ES is just stuck. I picked the wrong horse. Which is crazy because ES is NQ is the one that's inside day, so it should be moving less. Sometimes you pick the wrong horse, you know? What can you do? How much time is left on this friggin' candle? 7 minutes. I'm going to leave it up there for now until NQ hits its target. Jordan, why did you decide to short ES instead of NQ? Because ES failed yesterday's highs. NQ is still an inside day. So usually when things are inside day, they don't hit their target. That was just funny. Yes. Today's a crap day. OPEX. No, NQ. I mean, NQ should get all the way down here. The 361. That's where stops are. On the hourly. Pretty sure it was the hourly. Yes, which we talked about that target this morning. And silly ES is still an inside 60. However, it's not an inside 30. Yes, it is. We need it. That's what I'm saying. I need it to break these lows. And I took the 15, the 2 up, 2 down 15, because I want this to be my Browning formation. Hold on. How do I? All right, let's see. Slight higher highs. So then I would expect lower lows. Can't draw it. There you go. You know what I mean? I want lower lows because we made higher highs that failed. So that's your Browning formation. Low, high, failed high, coming back through. Puke, please. Like, let me get something. Okay, NQ hits its target of the 361, I think it was. Yeah, 361. To the tick. Okay, so NQ hit its target. What did I say? I was moving my stop to break even because that is the bounce potential. We don't say the word bounce, but exhaustion risk potential. But NQ also has a really nice close nearby target of 348. But it did do its job. That was its target, right, on the 60. So target 1, target 2, which if ES is going to do anything for me, I need NQ to hit its second target. Okay, so ES just, so if I had more than one position, I would take profit at a new low, which we just hit. 31.75. Nope, didn't break it just yet. But I still want this guy. So how much? We only got 3 minutes left on this 15-minute candle. Puke, but puke, puke, puke. Okay, let's see. That's the 4-hour. Okay, so NQ, sorry, ES also in hitting a new low of day just triggered the 4-hour down. I'll show you. So that's my intraday, an intraday target, but that's also a 4-hour trigger into a pivot machine gun. So we're definitely failing yesterday's highs. That's why I took that short. And I think my target is there, 27.25. But whatever, my stop is at break even. NQ still working on its fresh lows. Come on, we want it to do it within the next 2 minutes, because if we get a 15-minute flip and they go green, I'm going to be not happy. So I want it to happen. There you go. Come on. God, I picked the wrong horse. It was the same entry on NQ. It was the exact same strat entry, which is a 2 up, 2 down. It's just NQ performed a lot better, right? So it hit 1, 2, 3, 4 targets. Now ES is at exhaustion risk. But please go do it. I'm going to even raise it just a little bit because I'm running out of time here. What time is it? I got 1 minute. And then I can defend it. I don't really want it coming back above these highs. I really want it to go take those lows. Puke, boy. 27.25. Come on. Do it in the next 40 seconds, please. For all that stopping out. So see how one trade can cover all your losses. Dude. This is where I get really ants in my pants because I only got 20 seconds left. Do it. Fuck yeah. for the language. Okay. All right, so the 4 hour, all right, let me get back. The 4 hours in force, I got too much on the charts now, hold on. Into a pivot machine gun. So we took the 15, yeah, we took, all right, so this was the domino trade. Okay, oh, this is beautiful. I can't wait to talk about it. Okay, so failing yesterday's highs, right? We just hit T2, which is 59.25, and now that's where they're taking profit. So I was more than happy to get out there. It's only 2 points. But what we did, let's pay attention. We marked, so we're on the higher time frames first. So we mark our 4 hour trigger, which is a 2 up, 2 down reversal. That's the 4 hour line. Here, let's make it big. I don't know why I'm only using one pane. I assume everybody can't see like me. So here you go. I'm even going to delete that. Okay, so that's the 4 hour trigger, a break below the last 4 hour trigger, the higher low. And then you got 1, 2, 3, 4. This, we call this a pivot machine gun, which is stacked stops or stacked targets. Then we go down to the hourly. No technical actionable signal here. It's just continuation. Go down to the 30. What did we have? We had a 2 up, 2 down, 30 minute. So that's the trigger for the 30 minute. Then we had a 15 minute that could trigger the 30. So these are my favorite kind of setups. It's called, again, it's called a domino trade. Now they start at the higher time frames. You start at the higher time frames, but they trigger from the lower time frames. So I wish I could make this so much bigger for everyone. So here's Friday. I don't know why I keep calling yesterday Friday. Here's yesterday's highs. See the flip? Look at that. Look at that. Look at that. Look at that. Okay. I'm getting too excited. Yesterday's highs, failing. 15-minute reversal. This is a 2 up, 2 down reversal. Do I need to whip out my sheet? Hold on, I will. Two up, 2 down. 2 up, 2 down. This is always a live candle. The last candle is a live candle. Short there, okay? 2 up, 2 down. So the 15-minute triggered the 30, which triggered the 4 hour, and then we hit, you know, these are all targets on the way down as well. So the 4 hour trigger was the intraday target, and then you had this target and this target. Then that's why I was so adamant about it happening. I was like, I only got 20 seconds because I know what happens on the flips. You see, we had this big, oh, it's hard not to cuss sometimes. Sorry. You had this big giant red candle, and then you get a new candle flip, and then you get a big giant green candle. So that's why I was like, it needs to happen right now because I don't want to get caught in a flip. So I hope that makes sense. So the short was from here to here. Not great. They're not, I mean, today's range is pretty small. It was about I actually took less than, nope, I didn't make the 20, I did 27 something. Something like, it was like a 10 point. It's not very impressive. But the point is the strat works. Even if you stop out multiple times, because the reason we took this to the upside was because it was going to put us back above yesterday's highs. But when that doesn't work, it doesn't work. Then you play the other way. So people are always like, well, why do you guys never show failed trades? Because even though a trade fails, we get in, we go the other way. How do I set my charts vertically? It's real simple. Well, you have to pay for TradingView and then go up here and pick vertical. And then all my intervals are synced and my crosshair is synced. So I only have 3 settings. I've got the vertical grid and then interval and crosshair selected. Do you see, though, why it's so important to take profit at targets and mind the flip? We say this all the time in the strat world, mind the flip. And you can see it clear as day. Red, green, red, green, red, green. So you gotta be careful there. All right, we have 10 minutes and I'm not taking any more trades. I took quite a few losers because I was getting chopped up, but the one winner should have paid for my losers. I don't like to pull that kind of thing up on screen because I don't want you guys seeing my business. So I'll let you know on Twitter if it did. It should have. Sorry, I'm trying to read. Look at this big reversal candle after hitting magnitude. A magnitude is just a fancy word we use for target. Wow. That's aggressive. Aggressive down, aggressive back up. So on a 5-minute, it's probably like a pivot machine gun. I wouldn't be surprised to get up there. But I'm not taking any more trades. And I mean it this time. But I saw that 15er, the broadening formation. That's why, because I did say I wasn't going to take any more. And you guys remember, I drew this. I was like, we made higher highs, and then we failed. So then we'd look to go and make lower lows. And then once we do, we triggered the 4-hour and then hit our target. So it's okay to be wrong. It's not okay to stay wrong. Because if you remember back here, I took this inside 5er and up to trigger the 30, to trigger the 60 to the upside. It didn't work. I had to get out. And then go the other way, which is what I did. And I want you guys to learn. I don't want you just clicking buttons because you see somebody else clicking buttons. Like that is not self-sufficient. You will not make it. So we're very adamant on teaching the strat and teaching the whys and all the principles. Thanks, Justin. No. Sean said, do you take swings here, shorts, based on the 4-hour? No. All the time frames, all the higher time frames are bullish. We have no reason to be short other than day trading. Like, it's cool to short a 15-minute candle if you're day trading, but you have no business being short on the higher time frames. And that's what we do. We are multiple time frame analysis traders. How are you going to turn this bright green week around? You're trying to short this? You're crazy. It's, like I said, cool to short intraday, like for when you have reason to. But to try and short this it's stupid. No offense. But the quarter is green. The month is green. The 2-week chart is green. The weekly chart is green. The 2-day chart is green. The daily is not quite green, but there's just nothing happening today. So next week we want to see them we want to see them keep making higher highs on the weekly. Until we get a lower low, there's no reason to be short. And again, the target on the monthly chart is new all-time highs. Again, by like the end of June, preferably. Doesn't have to be the end of June, but preferably. I don't care what OPEX is typically. I don't care. We don't look at hindsight data for what's happening now. That's why, like, when people compare a chart from like 2022, it makes no difference. No, for sure. I'm just saying, no, Sean, just no. We don't want to be short. We hit our target, and then you saw what happened. That's why this huge rebound. That was the target. The 27, what is it? Yeah, 27.25. And that's why I was like, no, it needs to happen now because the flip's coming. You just inverted head and shoulders. What? So you scalped just this? Hold on. Because you just did that. That's what you did. I mean, to each their own. Yes, there are bots in Discord. Turn off your DMs. Dow is not doing anything. Dow is stuck. We're stuck 1, 2, 3, 4 days inside of here. So until you can break this high or this low, you're going absolutely nowhere. Same with RTY. 1, 2, 3, 4 days stuck inside Monday's candle. NQ, inside day. This is why today was not great. Look how small the candles are getting. Like, give us these days. This is a teeny tiny range. This is a teeny tiny range. So part of your trader muscle is knowing when you should trade, when you shouldn't. Today's one of those days? No, probably not. Unless you want to sit there all day and just take scalps, which that takes a lot of energy.
Hey, Sarah.
Hey, Jim.
Good job today.
Thanks. It was kind of a lot of work, but we got one.
Yeah, no, it's funny because, I'm watching all you young folks trade and, you and Order Flow Labs guys and all that stuff. And there's a common theme, right? You're trying to get it, you try to get an entry. It doesn't work. You have your risk management going for you, risk management going for you, risk management going for you, and then boom, you get the move that you were looking for, and it makes up for all of that. And that is a lot of work.
Yeah, but just like always, you got to protect your money. And like I was saying on stream, you could stop out 10 times, and the one trade that works and works well, you've made all your stops up. So we're huge on risk and getting your stop to break even as soon as you can. We want to see trades work immediately. So it's just important. Again, if you run out of money, then you're done. You can't do this anymore. And that's seems to be a big problem in the like prop firm and funded account stuff is people and their risk management is just not good. And that's why we are here to help you guys understand if you blow up, you're gone. So get that under control. You know what I mean? And like I said,
Yeah,
I've been doing
I
this
mean,
for 7 years. I was not profitable for a long time, but I was great at not losing money. And that's why I'm still here today. So it's everything.
That is a great lessons learned. Sarah, we appreciate you being here with us on a Friday. We're going to see you next Friday. And you got big plans for the weekend or just hanging out?
Going to see a comedy show on Saturday, and then I don't know what Sunday.
Very, very cool. Well, listen, you have a great weekend. And we will see you again next week. So thanks for being here.
All right. Thanks, Jim. Bye, everybody. Thanks for tuning in. Hit the like button.
All right, all right. We are ready for our a weekly wrap up with Shy. Shy, how are you?
Did you forget that? I'm good. How are you doing, Jimmy?
I was like, we're here for something, and Shy's a part of it, and I don't know what it is, but oh my goodness.
Oh, good.
What a week.
It's been a crazy week, right?
It's been a crazy week. You
Well,
know, it seems it's so. I just wanted to talk to you a little bit about like the hard data before we get into the charts. The hard data is one thing, and then all of this sentiment data is another thing, and they don't seem to be jiving actually right now. There seems to be some divergence between the two sets of, I don't know, you can call it data if you want. I think I find that a little unusual. What do you think?
Well, yeah, I think, well, kind of markets are going up on good news now, and they're don't care about bad news anymore, right? That's kind of where we're at right now. So, you know, you have poor, you know, the University of Michigan data was, you know, disastrous. I think, what did we have? Sentiment was the second lowest on record, and 1 year inflation expectation was 7.3%, highest since 1981.
Yeah.
So what we're kind of seeing here is, you know, markets are just pretty much ignoring that.
Yeah, I was listening to Rick Santelli, and he was talking about he said he was tracking data back from before 1952. I can't remember the date, but yeah, like you said, this for Michigan. This is the second lowest, and then the first lowest was, you know, way back in yesteryear when they probably had buggies and horsewhips.
Yes, true. So, you know, we'll see. I mean, we had Trump come out earlier today also and said in 2 to 3 weeks he's going to do unilateral sanctions, right, for every country because they don't have time to negotiate with all 150 countries that want to negotiate with us, which means that's well before the 90-day pause. Markets brush that off entirely too. So it's one of those things where we're moving higher on good news if we don't care about bad news right now.
You know, it's funny. You know, I worked for the federal government a long time ago, and if there's one thing that we had was a lot of staff and a lot of people. And so I have a hard time getting my head around not having time enough to negotiate with everybody, right? There's a lot of human resources floating around in the federal government. Last time I checked, even with the Doge cuts, but maybe it's just because those, you know, the chief three people involved want to be, you know, hands on. I don't know.
Yeah, but I guess we'll see. I don't, you know, there are a lot of mixed messages in this administration right now. So we just take it one day at a time. That's all you can do, right?
That's right. Yeah. Well, let's cover some key markets. I have crude oil up on the screen, which is clearly a key market. Where are we at with this market right now?
So we're back and forth, right? We saw had a nice move up over the week. Then you had Trump say that we have an Iran deal, which turns out we don't have an Iran deal. And so markets have been slowly kind of inching up once again, because again, really this market has been entirely divorced from the fundamentals. The sentiment is just so poor in this market. Everybody thought drill baby drill was going to happen. Now we've just figured out that's not going to happen because, you know, you start getting below 55 and you're taking production off, not adding production. And so we're seeing demand still steady and rising. In fact, IEA, which hates oil and gas for some reason, literally has once again just revised their demand scenario higher for oil and gas. And so everybody, you know, even the staunchest renewable people are facing the reality that we're still going to need oil and gas for a while.
Yeah, and
So that's the fundamental side. But
yeah, a couple of days ago, I
so
mean,
that's
just to take it to just take it to extreme. You were mentioning coal being back in style. That's that's going back a little bit.
Right. So there you go. But you know, I like this weekly candle here, kind of. I think you know I think the daily looks better. I think if we can hold this level, this you know, let's call it 60.88 is where I have support at. I mean, it's wicked through that a little bit, but you know, if we can stay above that and be in that place between, you know, let's say 60 and 65, that would be a happy place where we're not going to lose production, probably not going to gain production, but we're not going to lose a bunch of production. And that would be good for all the E&P companies in the U.S.
All right, so 60 to 65. I'm just going to go ahead and put a rectangle on the side of my weekly candle chart there. We're right kind of toward the bottom third of it right now on a weekly. So we'll keep that there and focus. On the daily chart, you know, I still have my triple decker, BLT sandwich here where we have what I think is a really nice area of support around 6130-ish on a daily. And then the top of the conversation right now, anyway, we have some resistance at 64. You know, we'll round it to.
It's just me. Well, hey, guys. I guess we lost Jim for a minute. We'll try to get him back. I do not have any charts to show right now, but we can talk a little bit about what has happened over and Jim is back. All right. I was going to bore everybody to death with fundamentals.
No, I had a power outage this morning that lasted like 2 seconds, you know, just went off and on. And so I reset the router. I did all this stuff in a panic this morning.
Uh-oh. Oh, no. All right. And Jim is gone once again. We will try to get him back. Oh, and there he is.
I don't know what's going on. Apologies, everybody, but we'll get through it. In any event, so that's pretty much the story on crude oil on the daily chart. Intraday, you know, not that much activity. Really nice volume profile. Why do I have this chart trader open? Let's turn that. Let's hide that. Really nice volume profile here. Pretty tight value area from 61.60 to 61.99. We are trying to break out a little bit. So we did break out to the upside from the initial balance, the U.S. initial balance at 62.11. So we are driving up. We do have this target wick here, this weird wick. I don't know why we got this weird wick. I'm sure it was some crazy fake news event, but it's still a wick on the chart, which means traders see it, which means it could be a target also, 62.34. But the volume seems to be all centered toward the middle of this chart right here on the last day of the week. So I'm not, I don't know how long this actual breakout will go, but we'll see. Stranger things have happened. So in any event, Tracy, let's move over to gold because gold's been a really good story.
Yeah, gold's been, well, the initial, we knew that this market was, kind of parabolic, so to speak, and that a little bit of air out of the market would not be a bad thing, especially for the bulls. We did see a lower high, which was the first lower high in forever. And so pretty much was kind of a short signal, right? And I think that was a lot to do with, the 90-day pause / tariff resolution with China. At least, we got tariffs down to 30% instead of 150%. So there was a lot of kind of that safety trade was taken out of the market. So we have seen a fairly decent pullback. I would not be surprised if we saw another couple $100 pullback on this market. And I don't think that would be a bad thing. Or do I think that that would change the upside trajectory of this market? Like, I would still consider it a bullish market, even if we got a $500, $600 pullback, in my opinion, because you're going to see at that point a lot of, we have to realize that this market is not just driven by traders anymore. This is driven by actual physical demand where we have central banks buying. And so this kind of makes it a different kind of trade than it has been in the past.
Yeah, and central banks obviously, goes without saying, have deep pockets depending on which one you're talking about.
Absolutely.
Yeah. Yeah, so it's interesting. When I was talking to Jimmy Euro on Wednesday, he has a 3,000-ish target to reload his long positions in this market. That's pretty close to these
like
lows
that.
that we saw. Yeah, I mean, did you hear that? It's
Yeah,
pretty
I
close.
watched that segment. I agree with him.
Yeah. So pretty close to the lows that we saw April 7th. And a couple of things on this chart. Yeah, we had this stochastic cross under early, so that was several days ago. But now we're seeing the moving averages cross under that 8 EMA underneath the 21. My anchored VWAP, we have more price separation between that anchored VWAP, which is about 32.70 now, to where we're trading right now. And we're just dangling our feet over this really kind of key 50 EMA right now. I would even move my rectangle down here right now. So again, this could hold for support, but 1, 2, 3 times we've tried to probe down lower in there. So that could suggest possibly a breakout to the downside if we keep chipping away at that floor. We've seen it so many times. We saw it intraday today in the equity market. On the intraday gold chart, it's pretty much been oscillating day downward. Session VWAP is in the rear view mirror. It's up here above the pivot. It's above the zero DTE put support level of 3,200. Really tight though, and same with London. London had a really tight initial balance. Those purple lines right there. Then we sold off, and then here in the U.S. we have a really tight initial balance again, going sideways, and all the volume ended up kind of developing the point of control on the volume profile at 31.76. We have the S1 pivot level right pretty close to that put support level, which is 31.65. So this kind of held as support also on the downside, and we'll see if we can get any traction toward that VWAP area as well on the upside later on today. I don't know if we will or not. We got to get to that 3,200 level also as well. So Tracy, let's pivot to the next market, and I think the next market, since we're talking about gold, let's talk about silver.
Yep. So silver, again, this market is really just coiling. We talked about before that, the fundamentals are there. The supply demand issue is there. Of course, everybody was worried about trade, and since silver is also an industrial metal, the tariff situation has kind of made it difficult for this market to move a bit higher because we don't know how, what tariffs are going to be up. We don't know percentages. We're on another 90-day pause. I guess we're going to find out in 2 to 3 weeks, according to months and months later. So I'm still anticipating a breakout to the upside in this market, but it can coil for a lot longer.
Yeah, no, I love that expression coiled. I just, again, my hamburger bun is there. I got support at the bottom. I got resistance up at the top. You could probably even bring that down a little bit and say, all right, so we have a couple of outliers where we drove up into that area of resistance, but then sellers brought us right back down. We didn't, no candle closed up there, right? So that's it is tight. It's a coil. One of the things though that's interesting is all of these wicks, these buyers wicks that keep penetrating this area of support. It started off the bat on the 15th of April, then a probe, and we kept going here. So I'm a little bit worried about an actual breakthrough on the downside, at least temporarily, with respect to the technicals here. We do have that ADMA crossing underneath the 21, crossing underneath the 50. So again, not a lot of separation between the EMAs at this point. It's going to take another data set. We'll see what that looks like on Monday. The stochastics, yeah, they're kind of tangled in love down here. Still not oversold yet. So there's room to grow there as well. Intraday, we have a lot of lines on my chart, and I'm going to go over these. This is one of the reasons why I love the daily pivots. We have right off the bat, we have the a really tight range again in the London initial balance. And then we sold off way below VWAP, session VWAP, and then rallied back up. But we hit that pivot, that boom, we just hit it. We stuck. We couldn't get through it. We wicked to it. And, this is a great level that a lot of traders look at. And that's why I always have it on my chart, 32.46. And then we sold off. And then we had a initial balance breakout to the downside. And it looks like we're going to end up there. Volume profile is not very helpful here. It's kind of wonky with 1, 2, 3 distribution nodes. We do have that Menthor Q one-day min right here, 32.13. And then all the way below, at the very, very low here, what time was this at? This was 8:30 to 8:40 candle. We did wick through that 32 even number. Those even numbers are important. That's a 0 DTE put support level for silver. So, I want to be bullish here, but I'm a little bit worried about the future. Which brings us, though, to, I think, my favorite market, which is called the Bitcoin. What's going on with
the the Bitcoin? I love it. I just thought this. I just thought this chart was really interesting. In the fact that this weekly candle is, first of all, tiny, and second of all, kind of an indecision, maybe a turnaround candle too, but it's tiny comparatively speaking to most weeks in this market. And so I thought it was very interesting. And I also saw, did you see Michael Saylor has a documentary out about Mr. basically? I just had to throw that in there because we're talking about Bitcoin. Just leave it at that. If you guys haven't seen it, take a gander at some of it. No. But yeah, I picked this market because I just thought that candle was really interesting. I'm kind of worried about a little bit of more downside. I mean, we could potentially have a candle tomorrow next week where we start higher and then end lower. But it's a very interesting candle. And so other than that, I don't know how fundamentally this market is driven.
Yeah, no, there are Bitcoin evangelists, we'll call him. Saylor, of course, is at the top of the pack there. Quite a character, but he's passionate about it, right? I mean, he's, I know he's got a financial incentive,
100%.
but he's all in. So anyway, it's checking out. I don't know what I just drew. This is like a head of a duck or something. I don't know what I just drew, but it's, you could say, use your imagination, say there's some kind of flag pennant there. I don't know. But to your point, Tracy, these are baby candles. Today, yesterday, look at the bodies of the candles of the Bitcoin. They're just baby candles compared to what we're used to in this market. Love it or hate it, doesn't matter. This is still a really nice pattern right here. So yeah, I'm anticipating a breakout one way or the other. We've been really kind of walking up the 8 EMA ladder really nicely over the last several days. Starting to, the slope is still pretty, pretty good. So same with the 21, same with the 50. So that's a kind of a bullish sign to me. I have a target up here at 107,470. That's back from yesteryear. That's a high that we saw earlier. And we'll see if we go, but we're firmly above that 100,000 now, which, a lot of people, predicted. And sure enough, we're back there, but we've been overbought since April 22nd. It's a long time. It could stay overbought forever. Don't get me wrong, but this is just kind of shows you how strong it's been for a long, long period of time. Let me try to pull up an intraday, and a really nice volume profile for the micro Bitcoin. Usually you don't get this. Remember, this market is not only traded 24 hours in the cash, but it's 24/7 in the cash world. So to get this kind of really nice volume profile on a 23-hour footprint is unique for Bitcoin, to say the least. So we have some price happiness here in the value area, and I'm going to define the value area, well, as anybody would define the value area. The bottom of it is at 103,900. And the top of it is at 104,425. We just tried to make a run for the money up here, but sellers just brought us back. This is a crazy looking wick, the one before, not the wick we're on, but the previous wick. Sellers just really just pounded this back down pretty forcefully. We did get to that Mentor Q blind spot one, interestingly enough, just really, really temporarily. The London initial balance is different than the U.S. initial balance, but not as different as it is in the other markets. So we had a kind of a decent range overnight there, and then our initial balance in the U.S. his initial balance was a little bit bigger. And look at that VWAP here. This is the session VWAP, that white line going across my chart. And it is like flatlined, man. There's price happiness right there, right in the middle of that value area right now. So I wouldn't expect us short of some unplanned news, which could be popping out at any minute, of course. In the Rose Garden, you get these little pop-ups popping up and saying stuff. It could happen. So we'll be careful. One last note here that I thought was interesting was that Jack's 3 level, gamma level again, was the low wick of the day. So that's the story of the Bitcoin. Shy. Do we have yeah. What kind of economic news do we have hitting the street tomorrow? Next week? Do we have some big movers?
So we have very little data next week. So it should be an interesting week. On Monday, we do have a gaggle, I call it a gaggle, of Fed speakers. You have Bostic, Williams, Jefferson twice, and Logan. Tuesday, we have no data. Wednesday, of course, we have crude inventories. Thursday, jobless claims, S&P Global Manufacturing and Services, existing home sales, nat gas inventories, KC Fed manufacturing, and Friday, another quiet day with just building permits and new home sales. So very little data to move the markets next week.
Yeah, so on days when all the Fed speakers are out, I like to refer to them. I like to refer to Fed speaker day as Fed Palooza. We have Fed Palooza today because there's 5, 6, 7, 8 of them.
Yes, so that is Monday. So that should be fun. But as far as data, quiet week next week. So, and next week we're going into a holiday. On the 26th is the Memorial Day weekend for the U.S., so markets will be closed. So quiet week in front of a long weekend.
Yeah, no, I hear you. But you mentioned an S&P number, right? Was that Thursday?
S&P Thursday, S&P Global Manufacturing PMI and Services PMI.
Yeah. So, question on that. I mean, we have that S&P PMI numbers, and then you also have the ISM numbers as well. They're two different things, right? I mean, they're not two different things, but they're two different organizations. Do I have that right?
Correct. They're two different organizations. They both measure the same thing, but they both have different parameters, which is why their numbers are different. And I won't go into the whole nuance of it, but it's the same exact data, just each organization crunches the numbers in a different way.
Okay, that makes sense. I mean, those numbers to me seem to be kind of important sometimes. I don't know, but we'll see how. I don't know what the trend is. The trend's probably not that great on the manufacturing side right now.
Correct. We've been at a little bit of a decline on the manufacturing side. Services that will be important because again, we'll be looking at kind of the strength of consumer. I don't think it's necessarily market moving information, but for an economic standpoint, it will be important because everybody's kind of waiting for the consumer to finally peter out. Everybody's kind of expecting this because it's kind of a sign of a recession to come. So this number is closely watched for what the consumer is out there buying and paying for, or not paying for.
Yeah, that makes sense. How do you feel about, the big Middle Eastern trip, President Trump and his entourage? The media is portraying it as a total victory. How do you feel about it?
I feel like the media is kind of mixed on it, but I think there's a lot of money promised with
Yeah.
MOUs, right? And I mean, we're talking trillions, right? Between all of them, I think it was over $3 trillion between Qatar, UAE, and Saudi Arabia. I mean, I know for a fact, Aramco is investing $90 billion in the U.S. in several U.S. companies, as well as expanding their own Motiva refinery. So there's a lot of energy deals going on with Aramco, which I am glad to see. And it's not just all for oil and gas; it's for AI and for chemicals, and there's a lot of deals in there. So that's good news, and also just investment from the Middle East into the U.S. is not a bad thing at all. There's a lot of defense contracts that went on for Boeing planes and other defense materials. So good for, I guess, the U.S. defense industry, obviously. So far it looks good. We'll see. We'll see how much of this comes to fruition. So sometimes, just because they signed a deal that they want this to happen doesn't mean it happens immediately. So, we'll have to see how this all pans out as far as, when these deals physically actually happen.
Yeah, that makes sense. I wonder if the administration is ever interested in doing the exact same kind of thing in South America. I mean, Brazil is just a resource wonderland.
I would think that would be a great opportunity to do so, especially in a geopolitical sense, because we have seen China, say, move into South America, and being that there are basically our neighbor, right? I definitely think just from a geopolitical standpoint, and I'm trying to be as, anti-partisan here as I can, but from a geopolitical strategical standpoint, I think it would behest the U.S. to go down there and make some more deals.
Yeah, sounds awesome. All right. Well, Tracy, thanks for being with me. It is almost the weekend, right? Hopefully you have great plans for the weekend.
It is. I don't have an. I'm kind of up in the air, so we'll just see what happens.
Yeah, no, I am doing the exact same thing. So, well, you have a good one no matter what. I'm sure I'll be texting you later on today. But if not, have a great weekend, and I'll see you Monday.
All right. I want to text. I better text me with you and your martini.
That's going to
All
start
right,
shortly.
guys.
So, all right, coming up next, we're
Have a
not
great
done yet,
weekend.
everybody. Thank you, Tracy. We're not done yet, everybody. Coming up next, we're saving the best for last. Why do I keep freezing my screen here? Hang on a second. Before I introduce the main man, I just want to check my connection status to make sure I'm not messing something up. Um, uh, I'm good now. All right, great. Michael Liddick, Back to the Future Trading. Michael, how are you?
I'm doing better than a guy should do, Jim. I'm waiting for the police to knock on the door any second and shut it all down. How are you?
Pretty good. Listen, I would never be a whistleblower on that, man. It wasn't me. I didn't say anything to anybody.
I don't want to go down that road. I was given a disclaimer of things not to talk about, and we're going to leave it right there.
Oh my God. Well, welcome to NinjaTrader 2.0. I know you were a
Yeah,
multi.
wow, look at you guys. You're huge. You're monstrous now. You're taking over everything. What was an already amazing company and platform, man. We're super excited to be along for the ride. How has the transition been?
It was surprisingly smooth. Um, because for me, you know, going online for 3 hours a day trying to think of something to say. Hopefully it was educational and fun. But now we have a little bit more structure. But we have some great, I mean, the great hosts. We got, Anthony Crudele, we have Shy. In my wildest dreams, I wouldn't imagine being a co-host with Shy anywhere. So I'm happy with that. And then, we have the guest thing we're still working out. We're getting some folks in. So we're glad to have you here, man. And with your unique peek at the futures market. So I
Sure.
just wanted to get you on here, talk markets. Any market you want, it's in your front windshield right now.
Yeah, we take a look at all the ones that you were talking about. I missed the name of the last guest. If you want to just let me know who that was, and appreciate them coming in
Yeah.
before me. You guys were talking about Bitcoin and a bunch of different markets, and I always love coming on after the guest in front of me because it gives me a uh, kind of a finger's pulse to check to see what are people looking at. We take a really different tack when it comes to trading in general. And we've said this before, and you've been really gracious about my lunacy historically, rather, not hysterically. It is hysterical lunacy, though. We sort of look at fundamentals and reports and releases and news the same way Ra's al Ghul looked at Batman in the Dark Knight series, and he said theatricality and deception are powerful allies. And so when I'm listening to the fundamentals in these reports, I'm thinking the largest companies in the world with the most to gain and or lose are paying historically larger and larger fines, manipulating the markets. Everyone is trying to sort of follow behind. And it seems like it's this giant elephant that's willing to break every possible rule to get ahead. In fact, JP Morgan, when we did the research, pays $1 in fines for every $3 that it earns. And we've gone back and looked and said every time it was worried about a recession, the market rose dramatically. Every time it said recession fears are easing, the market would collapse the next 3 to 4 days. And so there's this unavoidable wall that we run into when we're looking at things like reports and fundamentals, which can, if you're not careful, become an opiate. You can get really addicted to following them and saying, well, if I just study one more GDP graph, if I just look at the treasuries in this crossover, if I just really analyze what Powell was saying in between the lines, I'll have an inside track. And the data, we're engineers here. We're all about looking at the data. When you just kind of follow behind these corporations which are driving the liquidity in both the retail markets and the black pools, it seems to be that the rules of the game are not what we were taught. We're not playing Monopoly with them, we're playing Candyland. And so they've just paid $1 billion fine for spoofing. I had to look up what spoofing was. I had no idea what spoofing could be. It was
Well,
making
it's a bad thing, by the
right,
way.
but when you're looking at volume and you're looking at TPO charts and you're looking at volume spread analysis, it's not real. If spoofing
Yeah.
is a thing, then we're being shown the same things that gamblers playing baccarat in Las Vegas are being seen. There's a viral video of a guy, he makes millions of dollars a year gambling, and he noticed that the data coming in on the screen that they were supposed to place bets off of was wrong. And he actually placed a lawsuit against the casino and won. And I don't think markets are much different. So if we look at Bitcoin, for example, on a weekly time frame, you guys know my spiel. We look at the data. And so there's no EMAs, there's no stepping up the 8 EMA, there's none of the reports or are we bullish or bearish and what did Frank say last week. This software is looking at every tick of movement in Bitcoin since it opened. And we're asking a question that's outside of the framework of conventionality, which is what are the people who have the money to move the market doing? And when are they doing it? We don't believe a word that comes out of their mouth. I don't believe a report that they utter into the multiverse. What are they actually doing? And when are they actually doing it? When are our financial overlords pushing the markets? And can we find those patterns? Can we find those behaviors and extrapolate them forward into the future so that we're not walking behind the elephant going, oh, GDP, oh, oh, PMI, and we're instead in front of the elephant with the handlers. And so on the weekly chart, when we look at Bitcoin, there's nothing to tell us that it's bearish at all until we get to the week of May 30th. And the only reason that signal is there, it's not because of the lunar charts or the solar phases stuff I've gotten into in the past. The only reason that signal on May 30th is there is because that's the established behavior pattern. And so it's the institution's jobs now to do what? Lure everyone they can into this high and convince everyone that Bitcoin is going to 50 million, quadrillion, twillion. We're going to trade with Bitcoin on Mars. It's going to be monstrous. And so, of course, they're going to trip the stops out on or before May 30th. This pattern is a landmine. It's waiting there for us. And so if we drop down to a lower time frame, the daily, every single signal on this chart was known about months in advance. So if I scroll over to the right-hand side, here's the playbook. Imagine you're playing against Bill Belichick or the Carolina Panthers or Kansas City, and some kid walks over and says, Jim, here's the book. I found it. What book? It says New England Patriots offensive plays. And you'd be like, oh,
Oh,
let me
but Michael, to play against the Carolina Panthers, you don't
sure.
even need their playbook. I
No,
mean,
understood.
they're
But
that bad.
everyone listening understands, wow, it would be cool to know in advance that Brady's not going to pass the first quarter. He's going to run the ball a lot just to keep everybody off balance. And then you could shift your strategy against that. If you knew in advance what was coming, psychologically, emotionally, you're prepared. And so trading is basically a redistribution of wealth. Anyone who wants to play the game will be more than happy to take money from your account and put it in our account. And so everyone is a liar in this game. The best bluffer wins. And so when we're looking at these signals, these are the submarine World War II pings. Remember, if you're looking for a submarine, the hunt for Red October, pong,
Yeah, yeah.
pong, pong, pong.
But okay, but Michael, without giving us the secret sauce,
No, just
without
take a
giving
look.
us the secret sauce,
I'm giving
what
you
is
I'm
it?
telling your listeners where these signals come from.
Okay,
These are
keep going.
this is from the data of the banks that are this is the when the moves occur. And so we've been publishing these signals in our weekly webinars and daring people to come. So back since February, all of the signals on the right were known. if you look at the screen, anyone who wants to know when Bitcoin is going up or down, June 11th, August 3rd, 714, 723, 813, 827, 918 are the up times. Not because of a fundamental or what I think, but that's what they do when they do it. All of the signals on the top are times that we're expecting it to drop down. Now, why would anybody believe that? Right? That's a lot to ask people. The very last webinar I did with you guys, I was following someone who was a commodities advisor. He told people when he thinks gold is going to go up or down. Super great guy. And I have the email I sent him all of the times, and I published, these were on the webinar recording. If you go back at my last guest speaking position here, I told everyone these dates for gold. And this was a blank chart. There were no price bars here, right? You can go back and the recording has those. It's public record. And so if we look at gold on a daily chart now, what actually happened at the dates? There's a new president, there's tariffs, there's quid pro quos, there's a jet from Qatar. I've been saying Qatar. I learned something new this week. And so if you look all of
Well,
the
by the way,
times,
I say Cutter. I thought it was Cutter.
all I know is they're state sponsors of terrorism, and all of a sudden anyway, I'm not allowed to talk about that stuff. And so it makes people crazy. It makes me crazy. But Jim, I just want you to see, look at what happened at every one of the dates that were in the public record per my last appearance in gold. And we start to have a crisis here. If fundamentals are the love language of the markets, then why did it go up or down at 90% of the signals, exact swing pivot highs and lows? At the times that I told however many thousands of people have seen that video, the guy who read the email, who never called me back, he's a professional. And I said, look, here's when I think gold is going up or down. No moving averages, no VSA, VPA, LMNOP, silver bullets, just looking at when the markets were supposed to do what they've done before. And so that's in the public record. While we were sitting here, I had a chart for the E-mini S&P 5-minute chart. And last night I had a webinar on for our courses. And with about 100 people there, I gave people the times that the markets were likely to go up or down in the future. You can see on the right-hand side of my chart, this is NinjaTrader, the most powerful platform on earth. You guys, your programmers basically have helped us find ways to do database management on a scale no other platform can do. This is a great commercial for this platform. NinjaTrader can do things that no other platform can do. So for 16 years, we haven't found a single other platform that allows us to we have 33,000 lines of code for database management. And so if you go back and you look at our webinar from last night, I dared people to look at the times that we were waiting for today.
All right, so Michael, let's go back to the chart though. People could look this up. I will put it in the.
Do you see that? Let me make this last point. This was the webinar last night. You can see it was published 2 hours ago. And the highlighted yellow section, Jim, were the times for today's E-mini S&P published yesterday. Right? Here's the magic trick where there's no magic. It's just science and math. And if you see that signal there, what time did my thing start? I have a signal at 11:05. It's long until 12:20. And then there's a signal at 10:30, 9:55, 9 o'clock, and 7:40. And when you come and look at my live, but look at the live chart here.
Okay, but wait, slow down. So the white bars are signals to get long, and the blue bars are signals to get short. Is that how I'm looking at it?
Okay. Yeah, 100%. We use blue and white because psychologically they're a lot easier to deal with than red and green. Red and green, I find, have psychological connotations, and red means stop in nature, danger. Green means go. And so that can affect when you're trading and why you're trading. It can induce panic feelings or feelings of euphoria. Green, it must be good. No, sometimes green is bad. But in the webinar last night, if people were watching, this was a 24-hour-old signal to them. And look what happened 24 hours later. And then at 10:30 today, look at what happened 24 hours later. And then at 9:55, look at what happened 24 hours later. The markets didn't care what the reports were or what Trump said on TV or what Doge found. They had their algorithms prepared to fire off at these times. And I've been saying this and showing this for 16 years. And if we come and see, now we're up 7.25 points on this trade because we just believed them when they told us what they were going to do. And so the question is, how long are they going to go up? Most of your clients, most of the NinjaTrader guys or any traders get out of trades too early because they're innately afraid to lose what little they have. And there's always that little shakeout move in the middle. And this program says, listen, JP Morgan is getting ready to hand over $1 to make 2 more. They're unleashing the spoofing kraken again. Their behavior pattern, their radar target seems to suggest that they're going to push up. And you see evidence of this wild manipulation now that we see after the fact and go, man, that was crazy. But when you're watching for it in real time, there's the prior swing low. This is a shakeout move. Look at that. All of the stops right before they're getting ready to do what? Drive it up. So we take a different tack. We look at the casino. We look at the casino and say, what do they know about the cards? And how can I know about those cards before they do?
Okay, so let's do some forecasting for
Sure.
the E-mini S&P and the micro Nasdaq between now and the close today. What's the software telling us?
100%. So obviously Friday lunchtime, we're in a range right now. We have a sell signal at 1220, a buy at 125, a sell at 235, and a buy at 355. If we look at those in the context of what it usually does, yesterday we had buys at 9:20, 11 o'clock, 12:20, 155, and 405. Sells at 10:35, 11:20, 110, and 320. The other day that we gave the forecasts out in advance for was Wednesday. Wednesday, a lot of stuff hit the fan. And so what we do to prove to people that it's real is publish an internal memo. And so every week we have the times that we're expecting something to happen. And for Wednesday, we published this 4 days ago. You can see the before. And so when we say, why do we care about the times today? Because when we gave this to 18,000 people before Wednesday even opened, this is what happened after the fact.
Yeah. So,
and there's
all right,
so for the rest of the day, that's what we're looking at. And
okay,
now,
but Michael, wait, slow down. You're going too fast.
Sorry.
All right, that's all right. So I'm looking at this. I see 4 more signals through the end of the day. But now it doesn't talk about level, right? You're not showing, well, here's the exact price. Here's where we expect the price to go. You're just using the formula to come up with the time.
So our
Is that
biggest
right?
claim to fame is time. But if you come into the timing sequence, there is a 2-for-1 or a BOGO that kicks in with regards to time. One of the largest, most prevalent time traders, William Delbert Gann, was known for his work back in 1909. He was interviewed by Ticker and Investment Digest, Richard Wyckoff, the father of modern volume analysis. And Gann actually told us time has 2 components. It has a horizontal and a vertical. And so if we look at the signals in relation to the vertical and the horizontal, we start to see some really interesting things emerge. Time vertically is the one that most people are sort of following along with us for. But when you look at the horizontal component of it now, we have a pretty clear picture of why it's been bouncing, where it's been bouncing. So at the close of every candle, we see, and this is a feature everybody can turn on in their NinjaTrader program, when there's a cluster of signals together, we see where there's an even higher likelihood of attraction. So time has a component vertically and horizontally. And now when we start to connect all those areas that are within a few ticks of each other, we're starting to get a picture of what's happening right now. And so the dominant cluster of time resistance is from 59.4750 until 59.4850. We haven't been able to close above that since we closed below it here. And so that tells us a lot about this move at 11:05. You look at time like a Slinky commercial. Remember the commercial, Jim, where the Slinky was falling down the stairs? What walks downstairs, a loner impairs or makes a slinkety sound. We all remember that, right? Um, and so,
But mine always got all tangled up, and I could never. I mean, it was
yeah.
like
And my
there was a
Stretch
one.
Armstrong had a hole in it, and the Battlestar Galactica ship poked my eye out, but somehow we survived. And so, one of the things that we can do with regards to levels is now do what's called an exertion analysis. So if banks are pushing markets at these obscure times and manipulating them the way we propose, how far do they push when they push? I liken this to when we ran in gym class back in the 70s and 80s. You had the fast kid, you had all the other kids, and then you had the fat kid like me in the back. And so if you look at these exertion levels, how far did the market move when it was time for JP to push? And can you see, Jim, where I'm drawing those arrows here?
Yep.
What I can do now is say, okay, how far do they go when they go? And I pick these little arrows like blueberries. And again, it's all based on this premise that there's a Wizard of Oz behind the curtain who's driving all of this. And so when I pull all of those out and together, I get a minimum, a maximum, and a median. And so I don't have to guess. Again, banks are telling us what they're going to do. So there's the median, there's the maximum. So the most I can expect out of this move is somewhere between 48.75 and 95.50. After that, it's kind of wishful thinking. Maybe it keeps going. They discover oil under the White House. There's some weird announcement, black swan. But we've exhausted this move now. That's as far as that's as far as the fast kid could run, all the kids in the middle and the fat kid. Everybody made it back to the gym and it's shower time. So when we get to 12:20, we can do the same thing in reverse. We can ask the question, well, how far did they move when they moved? So from 9 o'clock until 9:55, how far did they go? From 10:30 until 11:05, how far did they go? And then you have the micro moves here, fat kid, skinny kid, and these moves are relatively tiny here, but we have to include them. So if we're sitting over here and we get to 12:20, in terms of risk reward, there's a tremendous amount of risk, a tremendous amount of reward available at the median level. And then you have these two little tiny moves. So at the bare minimum, when the 12:20 candle gets here, I'm expecting from 44.75 either a $5 move, or if it continues to sell off, a $21 move at most. So when you approach the game from that rule set, we're simply watching the game tape like the football movies teach us to. Look at the way he throws that ball. Look at the way he leans to the left. Look at the way that pitcher scratches his ear when it's about to be a curveball. If the banks are the only ones making all of this money all of the time, why are we looking at the shell game and the cups and where the marble might be? And why aren't we looking dead nuts in the eyes of the guy who basically takes millions from tourists every year legally? And
So
so
it's
this shell game
the
seems,
banks. So the banks, I would categorize. So would you throw a company like Vanguard in this bank bucket? You know, a really big institutional investor who's, BlackRock, those kind of folks. Are they in the same bucket as the bank bucket?
when I look at the 10-year notes chart, and that's the one everyone's looking at, recession, no recession, which way did the notes cross or go? I'm not seeing randomness. In fact, one of my favorite setups, and of course, I look at anyone who has 50 cents more than me as the banks. If you look at the
Okay.
markets in a Darwinian framework, we exist to provide more food to the people who look like us, and we don't care about the people who don't look like us, right? Genetically, we want to establish power and maintain it. So, where are the largest concentrations of wealth in the world? Of course, BlackRock and Vanguard. Of course, the trillionaires among us live in the Middle East. There are trillionaires right now in Russia from state-sponsored oil sales. Any place that has black bubbly stuff coming up out of the ground, you've been saving money since the 1800s and investing that money. Saudi Arabia is The Middle East is building a mile-long city in a straight line in the desert where there's nothing. Can you build a straight line mile city in the desert where there's nothing? No.
No. I can't. No,
Of,
I
of
can't.
course
I
they're
can't build
handing out
anything.
jets.
So,
I
so
give
Michael, we've
someone a
got
pen and I feel it.
Michael. We've got about a little less than 5 minutes left. Let's take a look at the micro. Could we look at the micro Nasdaq? Is that something you're tracking?
Yeah, sure. We can look at anything you want. I know you guys like to look at that. So if we look at the MNQ, what were the behavior patterns for today? And the chart tells a very interesting tale. What do I mean by that? We saw on the Bitcoin chart on the daily time frame, we saw on the gold daily time frame, and we saw on the S&P daily time frame what I call a black banana. What's a black banana? It's words that I use to help people to remember complex things. When we get to the times that we're expecting banks to do something and they don't do the thing, it's sort of like watching Mike Tyson fight Jake Paul. Did you see that fight?
Yeah.
Do you remember every time he had him in the uppercut stance, what did Tyson do instead? Everybody talked about it the next day. Every time he had him dead to rights, he would bite on his glove because he knew he had this kid ready to launch 2 inches off the ground. And he pulled his punch. He didn't throw it when we were expecting the lights to go out. So at 8:30 this morning on the MNQ, no buyers showed up when we're normally expecting them to do what they usually do. But at 9:18, whoa, 9:54 came. And look, black banana. You buy a banana, I'm going to eat healthy, I'm going to fit in those jeans I bought, and it sits on your counter and gets darker and darker, and it languishes there. It says, please throw me away before the fruit flies. Fruit flies. Ah! And so at 9:54, it was languishing. And look right now at 11:30. It's not going up when it's supposed to go up. So for the balance of the afternoon, I would be looking at 12:06. I would be looking at 12:39. I would be looking at 2 o'clock. I would be looking at 2:39. These are the times where those chambers are loaded for shorts, even 312 on this 3-minute MNQ chart. If
Okay,
they
but hang on. So now your bias is shifted to short trades instead of long trades.
My bias is always what is the trend? Most of the customers, people ask, why do you sell this if it's so good? Because there's this great symbiotic relationship between world-class traders using your tool and world-class engineering. And all the people I've met who are making money consistently, almost exclusively, are trend followers. So statistically, probability-wise, that means they make 45 to 55% of their trades are winners with a profit factor between 1.5 and 2 or more, following the trend. So for me, if the 120 period moving average is driving down, right, then I want to be short at 1021 until 1048. I want to be short at 1112 until 1133. If I'm still under that 120, I want to be short from 1206 to 1215 and inside of these windows. Not because of anything, and the magic of the moving average is just it's one that I picked and stick with. But I need some kind of filter to put the time signals in a setup with a statistical back testable framework. So on the MNQ on a 3-minute chart, those are the signals that I'm waiting for. And if the market's still falling, that's what we'll do.
So last question. So the key, stay there. On the micro NASI, we have a signal at 1206. On the E-mini S&P, I remembered it was at 1220. So what do I make of that time difference in price action, if anything?
Sure. Well, first of all, remember we're looking at a 5-minute chart on the E-mini S&P. And so if we want to do apples to apples, we're going to send the most powerful platform on earth, NinjaTrader 8, back into the historical data like a submarine analyst and say, what does the radar say on a 3-minute chart? That's it. And so what I'll do is reload the data without all of the chazarai, all of the nonsense on it. And we just look at it raw. We'll get rid of all the drawing tools and say, basically, what are the people who have the money to manipulate the market preparing to do at those times? And after 16 years, we're now faced with the following 3-minute map on the ES. And so if I pull this up, 12:39, 1:24, 2 o'clock, these are all Eastern time, by the way. 2:21, 2:39, 3:06, and 3:18. And if people are watching, they're furiously capturing via screen captures right now if they're like my webinar attendees.
Well, that's
And
all right.
so
So we're gonna show them. We're out of time, Michael, but we'll show them how to find you. Oh, just pull up your website really quick, just so they know where to at least start looking for you.
if people want to get off the squirrel hamster wheel and work with a company who's been with NinjaTrader for 16 years this May, we've been with you guys, and we're super proud to be affiliated with you and in the ecosystem. They can visit us at backtothefuturetrading.com, just like the Michael J. Fox, Christopher Lloyd movie, Back to the Future, trading.com. We offer free demonstrations, and if they want to see more about this tool, they can click on the Trading Tools tab. And this program we've been showing is Tachyon Warp. And if they want to learn more, they can simply go there to schedule a demonstration, be a part of our weekly webinar, and just kind of see if what we're saying here is for real or not. But the cool part of what we do, when we have that information in the public, like those gold signals and the bond signals and the note signals and those E-mini S&P signals, and you see it after the fact like they have today, there's sort of no question as to whether or not Candyland rules or Monopoly rules are the right rules.
All right, awesome, man. Well, listen, as we also cut and paste the link into the chat, everybody, you can see it there as well.
And God bless you for standing in front of the Michael fire hose today. Congratulations, you survived.
It's time for I'm going downstairs and having a black banana right now.
You're going to
lunch,
send her a picture of that drink she was asking you about today. You're not even going to wait for that vacation.
Every Friday afternoon, I'll send Shy a picture of that for sure. But anyway, thank you for being with us. Appreciate you. Looking forward to chatting with you again. In the meantime, you have a great weekend, and we will talk to you soon.
I appreciate it. Thanks, Jim, and thanks everybody at home. Good trades today, everyone. Be careful out there.
All right, all right. So we're going to wrap up NinjaTrader live for the week. It's Friday. We're not going in the afternoon. We're done right now. Fantastic week. Great lineup all week long, all the way through. Appreciate you guys in the chat. Appreciate you guys listening. You are the NinjaTrader community, and we're lucky to have you. So having said all that, most important message, especially going into the weekend, please, please be safe out there. Be good to each other. Thank you.